Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Wednesday, August 26th, and my name is Raleigh White, and I'm coming to you live from another beautiful, sunny summer day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics, including his midday market analysis and an updated stock watch list for this afternoon. He's then going to continue his discussion on the value of relative strength. He's going to talk about why it's important not to chase overextended stocks, and he's going to spend some more time talking about the benefit of debit spreads versus trading the actual asset, and he's going to conclude by giving us a real world primer on the importance of implied volatility. So an excellent session planned for you today. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone and we do have some ground rules. Always be kind and supportive in your posts. Please keep to the topic. No political discussions allowed whatsoever. And let's keep those side conversations to a minimum so that the rest of us can focus on the education and the information that Roger's sharing, because after all, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. Now, if you were with us this morning at 8 o'clock Eastern for Roger's pre-market briefing, you'll note that there were several catalysts on tap that we needed to be aware of today. First of all, we noted that the West Texas Intermediate crude was up a percentage point near $83 a barrel, and that was off the overnight lows of $81 a barrel. On the international front, the Euro stocks were down about 0.2 of a point. In the Asian markets, Shanghai closed up 1.1 percentage point, but the Japanese Nikkei closed down about 0.2 of a point. So not really much in the way of tailwinds coming into our open from the international markets. With regard to chips, nice rebound on chips, largely stoked by NVIDIA's returns. NVIDIA was up 7 percentage points, and we also noted that Micron, SanDisk, and Marvell were also all up 4 percentage points. In Infotech, we did note that CRM was up 11 percentage points, Crowd was up 9 percentage points, so Softtech was doing good there, but Hardtech, HP was down 11 percentage points. On consumer staples, we did see the Dollar General was up 8 percentage points, but Dollar Tree was down 7 points, and Best Buy was down 6 points. So really mixed results there with consumer staples. On industrials, we had A and First Solar were both up 3 percentage points. On the healthcare front, Moderna was down 4 points, and DVA was down 3 points. And finally, folks, with regard to Fed, as far as reports are concerned, we had jobless claims coming out, we had trade balance information, and wholesale inventory data coming out. And these are not particularly critical reports, but those are some that we needed to be aware of today. Now, for those of you who are wondering, why are these catalysts important? Why do we even talk about them? Well, from Roger's perspective, anytime there's information that's either known or will become known during today's trading session, but may not yet be reflected in the market, well, that's a volatility flashpoint. So if you're looking to trade a stock or a sector, or an index that could be impacted by one of these volatility flashpoints, well, it should give you cause for pause. Now, with regard to Roger's pre-market stock watch list, he gave us 16 tickers to consider, 5 to the short side and 11 to the long side. On the short side, you'll note that Nike is underscored, and the reason it is because when Roger brought up this ticker, he said, I really like the way this is setting up, so it's underscored. On the long side, you can see that we had several stocks that were underscored, 5 of them, TXG, Smuckers, DT, SN, and GPZ. And once again, the reason they are underlined is because Roger, when he brought those tickers up and shared that information with us, he said, I like the way that these are setting up. And so I wanted to bring that to your attention. Now, folks, I also need to point out that this is a pre-market stock watch list. This is not a laundry list of stocks that we're recommending that you go out and buy. from Roger's perspective, when he wakes up in the morning and starts to take a look at the market, he starts to look at which stocks look like they might be setting up as to something that could be interesting.
Oh,
And
this is
if
what he listened
during the
to.
course of
Oh,
today's
no,
trading
no, no. This one doesn't
session,
have caffeine. Hold on. Yeah, that's the
if dur-
cherry. That doesn't have caffeine in it.
let me go ahead and turn the volume
That
off
one has
there.
caffeine.
Okay, and if during the course of the trading session any of these stocks mature to the point that they meet Rogers' standards, then he'll more than likely take that trade and then share that with you in the trading pit or in another one of his premium alert services. As far as Rogers' pre-open analysis is concerned, we noted that the futures markets were divergent as the Dow, the blue chips, were not following tech stocks after NVIDIA results came out, and that was a concern to Roger. We did see that the put to call ratio was balanced and the VIX was lower actually below the 15 level, trading in the high 14s. As far as the long-term momentum is concerned, it was down. 70% of the S&P 500 companies were above the 20-day moving average. That's down about 3 points from where it was yesterday. And as far as the NASDAQ is concerned, 70% of those companies were above the 200-day moving average, and that's down a point from where it was yesterday. On the short-term trend, pretty flat. 52% of the S&P 500 companies are above the 20-day moving average. That's down 1 point. And then as far as the NASDAQ 100 is concerned, 52% of those stocks were above the 20-day moving average, and that's flat, exactly where it was yesterday. And looking at the indexes, Roger noted that the SPY, the QQQ, the SMH, the MAGs, they were all fading after the initial overnight pop from NVIDIA. So really we're not sustaining that gap up. Things were fading back. And he also noted that the bonds were flat, still above that down channel, but consolidating below the 50-day moving average. And to move up, it's got several key areas of resistance it's got to move through, but also a bit of a concern. So from his perspective, he's saying, guys, I'm going to be cautious. He said, I really expect that the market's probably going to open on highs, and then I expect them to consolidate or potentially even drift lower. So he's going to update us on his thoughts here, but this is what his thinking was as we prepared for the open of the markets. And we're delighted to see everybody here today. Roger's put together a nice agenda, and we're going to begin by covering the midday, market analysis. He's going to give us an update there and his updated stock watch list for this afternoon. Then he's going to do a continued discussion on the value of relative strength. He's been discussing that this week, and we want to wrap that up today. And he's going to also talk about why it's important not to chase overextended stocks, the benefits, once again, continuing discussion on the benefits of debit spreads versus trading the actual asset, and he's going to give us a real-world primer on the importance of implied volatility. Information that you're probably not going to see or read anyplace else. So really nice agenda. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, I've opened the chat panel to everyone, and we do have some ground rules. Always be kind and supportive in your posts. Please keep to the topic. No political discussions allowed whatsoever, and keep those side conversations to a minimum, folks, so that the rest of us can focus on the education and the information that Roger's sharing, because after all, he is here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. And with that, let's say hi to the gang. Hey there, Matt. Great to see you, my friend. Roger,
Hey,
good to see you.
greetings.
Greetings. Well, Roger, we made it through Wednesday. We made it through NVIDIA earnings. I woke up this morning, pinched myself, and said, "Okay, you're okay. Everything's just fine." But nice session this morning, Roger, as always, just prepping us for what we could potentially see today. And your closing comments were, you expected the markets to open up,
Yes,
probably drift sideways, or
yes,
maybe even fall a little bit off of the NVIDIA pop. Any
yes,
changes or surprises in what you've seen
yes.
so far?
Yes. The market is clearly stronger in the morning. Up to about for the first hour, 10 minutes, it was actually doing exactly what I thought it was going to do. But then instead of just consolidating or going down, it actually popped up again. The question is this pop going to continue, and is it gonna remain where it is right now?
Right.
And one of the things I said is I'm expecting it to cool off by I want to see it cool off by end of day. What I was telling Matt was up in the morning. Actually, I drew something here in the morning, and I'll show you exactly what I drew. And it gave folks a really good idea. Now, I don't even know if it's still up here. I draw, oh, here it is, right here. I got it right here. Right here. Actually, let me post it and show it to you. I have to move it from one computer to the next. It only takes me a second to do that. All right. So let me post this here. Bear with me, please, because this is actually literally what I showed folks this morning. Okay, here we go. This was the
that was your morning Picasso.
Yeah, that was it. That's literally what I drew this morning. This is in the pit channel. I mean, was posted at 8:58. And this is what the market is looking like. Let me show you. And this is what the market is looking like right now, like this. So here's what I thought. I thought we were going to pop right here, Raleigh. And I thought we were going to consolidate here and then start coming down.
Right.
But instead, we went up and now we're consolidating. So in theory, folks, give me some grace here, okay?
A little leeway here.
in theory, if we come down towards the VWAP at the end of the day, I won't be that wrong. But if we stay up here, I'm going to be about as dead wrong can be. And what did I tell you this morning? I want to be wrong. I don't want to be right. We'll all be in a much better position if I'm wrong.
Right.
We all, folks, let me tell you something. A secret to your success, we always make more money if I'm wrong than if I'm right. So I love being wrong because there's more money to be made, okay? But, it is what it is. So you see how I was seeing upside, continuing upside, and then... So if we come off, even up to here, between now and, say, 3 o'clock, 3:30, then my reputation will be will be intact. But if not, you guys can send me nasty emails and tell me that I made a mistake, and I'm okay with that. But this is what I was expecting: up, and then chop, and then towards the end of the day, downside. Now, the end of the day is going to be very important today for multiple reasons, and I'll tell you why. First reason, I want to see if all the folks who've been buying up all the software and tech stocks this morning, if they're going to stay with their positions. Okay, that's number one. I want to know if they're going to stay with their positions. Number two, we have earnings on Marvell coming out, and earnings on Marvell are going to be very important. A lot of folks thinking, Marvell, Schmeivel. Let me tell you something. I'm gonna tell you something about this company. Here, actually, I'm not going to tell you anything. I'm going to show you. So much better to just show you. People seem to focus a lot more when I show them things much more than when I tell them things. You see the constituents in SMH? Look where Marvell is. Look where Marvell is, folks. Marvell is right up there with Applied Material, Lam, Micron, AMD. It's got a market cap of 4.4 versus like Lam. This is a second tier company. That's big. I mean, you got the Nvidia, the Taiwan Semiconductor, the AMDs, right, and the Micron. But this is like second. But it's a big stock. This is not like Cirrus Logic. This is a big stock. And right now, this stock is in play. So it's a hot stock right now too. So we got to keep an eye on this. And in case you guys are curious, I am not going to be doing any time spreads. I'm not going to be doing any time spreads at all on this stock. It's got way too much risk. And by the way, just so you guys see, this is Mia yesterday after the Nvidia earnings came out. She was very happy. This is Clyde after the NVIDIA earnings came out. He was very happy. And this is Harry after the NVIDIA earnings came out.
Oh my.
And Harry was very, very, very happy too. So I know we got some animal lovers here. So folks, please be careful. We have the stock. Another thing I want to tell you, there's a stock PDD and it's breaking down right now, and it's looking really good for a swing. Maybe day trade, maybe a swing, but it's looking really great right now for a short. Now, I'm going to show you this in real time. I love teaching you guys live things. So this right here is PDD. This is the intraday chart, and this is the daily chart. It's just now breaking the 100-day moving average. So this is not we don't know where it's going to close today, which makes it hard to do a swing right now, because if it goes back up, then it's not going to be a good swing. This is still not a confirmation. This is an anticipatory trade, but it looks really nice here. It looks really nice. And relative strength started coming up right here, and then it started cooling back down. And this is relative strength. We're going to talk about this. This is how weak the stock is in comparison to the SPY. And that's very, very important. Very, 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 very important. So just wanted to kind of give you a couple of things to chew on. Now, as far as the market, where are we right now? What are we looking at? What's going on? How are things? And by the way, I did we took another winner this morning, Raleigh, in the pit. I know you're shocked, but we took a winner in the pit. We still have not had a loser, even though we came very close to having some losers. We did not have losers, but I'm noticing that it's harder and harder to gain momentum to the upside on these swings, which is telling me the market is really struggling right now to generate any kind of rhythm. I call it rhythm. Most folks don't use that name, but rhythm is and you can have rhythm, right? You can have rhythm without the market going anywhere. It can just be going up and down. It's not even having any rhythm now. So there's directional bias, and then there's rhythm. So it has zero rhythm. It's like me. It can't dance. It can't hum to a tune. No rhythm. Okay. Next, where are we now, and where are we going? You know, Raleigh, I went to sleep a little early last night. I was tired, and I woke up a little late. I overslept by about 15 minutes.
Oh man!
And it was the best thing that could have happened to me, because I feel like I woke up usually when I wake up on a Saturday, so I feel extremely well rested. So really quickly, we now have our third winner in a row on the overnight income. I've gotten, Raleigh, I'm not exaggerating, I got over 50 emails this morning.
Yeah.
I'm only about a third way of posting them. Graham is telling me, the copywriter Graham wrote the deck, and Graham's like, too many testimonials. People are very, very excited about the 24-hour payout. So I'm very happy about that. Folks are making money on the small index, on the big index. I'm very, very happy about that. That makes me very happy. And folks, please let us know how you've been doing in that program. Also, a few folks this morning started talking about going to Interactive Broker, because Interactive Broker does night trading. Look, I'm going to be very honest with you. I'm going to be as honest with you as possible. They have a crappy platform, okay? I'd rather not do night trading, middle of the night trading, which I'm not going to do anyway, I'd rather not get executed in the middle of the night than use their crappy platform. Okay. So that's how I feel about that. So my point is, I want you guys to think twice, think long and hard before switching your account to Interactive Broker. Uncle Rogers doesn't love Interactive Broker at all. And I had a problem. I had quite a large account with them one time. I had some problems. I got the money out, but and I don't want to get into this. I have too many things to talk about. But I was at the point where I was getting some red flags, not because they didn't want to give me my money, but because getting to the right person to get my money was like it was like amazing. So I literally have an account with Interactive Brokers with like $500, maybe $1,000, just sitting there. It's not doing anything. My point, folks, is please. Sometimes, the grass is greener on the other side type of thing. There's nothing wrong with Thinkorswim, Tasty Trades. Just because Interactive Broker doesn't have overnight trading doesn't make it a better broker, okay? I had to get that out. Sorry if I'm taking too much time with this, but it's important. Another thing that I did this morning, Raleigh, we're not done yet. Remember I told you guys the other day, straddle strangles, how to find straddle strangles, how we use ATR to find straddles and strangles. So I did a strangle on Hormel this morning. Now, I made a mistake, Raleigh, and I wrote the wrong strike prices. I wrote the strike prices for a straddle. And if folks did the straddle, basically what I wrote, I did the 22 versus 20. And what I wrote was 22-22. So if you did the straddle, it's fine. You're not in a horrible position or anything like that. But it was my mistake. I wrote strangle, and then I gave you the price for a strangle, but then the strikes I gave were straddle. My apologies. I'm sorry. I was in a hurry this morning. I wanted to place the trade myself, which I did. I bought it now. You could still get it right now if you wanted to. Now, the idea behind this stock is, you see the ATR is about 64 cents right now. It was actually lower. It was about 45 cents when I placed it on. So I placed a Hormel call. I bought a 22 call, and I bought a Hormel 20 put. I was able to go all the way, Raleigh, to next Friday, not tomorrow, but I was able to go to next Friday, and I only paid, what did I pay? I paid 34 cents. I paid 34 cents for it. So I got it for about half of the current ATR, which I think is pretty fair.
Yeah.
Now, what I need for Hormel to do is I need Hormel to move, to continue. See how it's moving? I need it to continue moving. So I need Hormel, and this is a bonus trade. We do them maybe 2-3 times a week in the pit. They have a over 90% win rate. So I bought it at 34. I set the exit at 50. Okay, 50 cents, and I'm just going to hold it and see what happens. So if Hormel takes another big dump, let's just say loses another maybe $1 or $2 to the downside, or starts really coming up, I will make money on that trade. The worst thing Hormel can do is just consolidate right now, and it's it's breaking the low right now in high volume, which is good for me. So if you guys missed it, it's Hormel, ticker HRL, and I bought the 22 and I sold the 20, and I bought the 22 call and I bought the 20 put, and I did them both for 34 cents. Okay. The way it's itemized on my sheet, the call was 24 cents and the put was 10 cents. But anyway, it doesn't really matter. To me, it's just one position. Okay. Any questions before I move on?
No, just excellent there, Roger. A number of people have chimed in that they're 3 for 3 on the 24 trade program for those that got in a little bit early on that. So once again, not surprisingly, something with a 92% win rate is doing well.
Yes, it's doing very, very well. And what else did I want? Oh yeah. So now let's talk about the market real quick. Let's get into the market. I'm energized, like the Energizer Bunny today. And again, folks, my deepest sorries and apologies for confusing you with the Hormel. I'm sure you guys can understand, straddle, strangle, 22. It's a mouthful, And no, Hormel did not do anything bad to me. I don't have any personal grievances with Hormel. I'm not strangling it out of bad intent. That was a joke, a strangling joke, trading joke. Okay. All right. Let me show you the SPY. This is the SPY. Let me actually show it to you so you could see it. Here. Okay. This is the SPY. The SPY actually this is a quick strike positioning right now. It's above the 8-day EMA. It has to confirm here. As of right now, it looks like it's going to confirm, but time will tell. We don't know what the market will do next. We'll see if I'm going to be right or wrong at the end of the day. Mags are looking fantastic. That is beautiful right there. That is absolutely beautiful. Matt, are you seeing my screen? It looks very nice, doesn't it?
It does.
You look almost as excited as Clyde did this morning. Okay, QQQ also looks really nice. Everything is above the key averages. Now let's look at SMH. SMH is not above the key average. It's above our trend line right here. This is the 100, but it's not above the 50 or the 200 yet. We need to get it up here. But this is a good start. It's still lagging behind. It's still lagging behind. Let me take a look at NVIDIA. I actually have not looked. I've looked at NVIDIA, the price of it intraday, but I have not looked at it on a daily basis. We still are not at all-time highs. We're probably going to have some follow-through, if I had to guess, at least based on the volume that I'm seeing right now. But so far, this is looking really nice. It's looking really nice. Okay. There's another trade that we had, a bonus trade in the pit on snow. It's actually looking really good as well. Okay. I don't really track the bonus trades too much. Okay, I'm going to give you the stocks that I'm looking at right now, and then we'll take any questions, and then we'll move on. I'm surprised we don't have any questions.
No, just once again, I think a lot of people here are just absorbing what's going on, sharing some wonderful comments about the 24-hour, trade program that, Roger, we've been very, very focused on for the past few days. And in looking at the chat panel, that's where we are right now.
Yes, yes. Okay, so I like NVIDIA right now. I do. It looks beautiful. So we can add that. Only day trade mode only. High volume candles above the 8-day, way above the 8-day MA. Day trade mode only. But that's the trade I would take on NVIDIA. So I'm not really concerned there. All right, we'll come back to NVIDIA. I'll add it to my long list. We'll add it to the long list. Let's go through our shorts. PDD. This is a trade a friend of mine took this morning. I did not take it. I missed it. I was too busy with, I don't know what I was doing, but I was too busy. But this is see how it's breaking the 50-day moving average?
Mm-hmm.
And it's coming off, and it's right now at the lows of the day. This is a very nice stock, and I actually like it for a swing if it stays around here towards the. I'm going to be watching this at about 3:30. And I'm going to be seeing if it still looks like this. And if it does, I may want to take it for a short. It's a really nice look. And I love how these highs are getting lower. I like when the highs are getting lower. It couldn't get above the 100-day moving average. This is definitely a bearish stock. And consumer cyclicals right now are in the crapper. As I showed you guys this morning, they were some of the weakest sectors. Nike, another consumer discretionary stock, still looking pretty bearish. Walmart, folks, Nike, are you starting when retail goes down? That's a bad look for the economy. That is a bad look for the economy. And interest rates have a lot to do with it. Okay. And folks, I've been trying as hard to respond to your email. I responded to about 3/4. I still have a lot of emails. Please, please, please give me some grace. I will get back to you. I promise I will. VFC. That's a nice looking, again, consumer cyclical. Are you noticing a lot of stocks? A lot of consumer discretionary breaking down. A lot of consumer stocks breaking down. That's not good. Here's another one. Another footwear stock, Nike, now Hoka. I don't know if you guys know this or not, but this company makes Hokas and Uggs. My daughter loves Uggs. My daughter, Rachel, she loves Uggs. She can wear Uggs like 24/7. My wife used to be a huge fan of Hokas, but she realized very quickly she runs and I walk. They'll last another 100 years for me, but the bottom gets it ends up costing 3 times as much because the shoe lasts half the amount of time, which is not good. TPR, is Richie here? Richie, are you crying? Richie loves trading this stock to the upside. I'm not sure if he likes trading it to the downside, but Richie loves this stock. I don't know if Richie's here or not, but Richie, Tapestries on another consumer discretionary stock. Are you guys seeing are you guys understanding what I'm trying to say here?
Yep.
There's a lot of consumer discretionary stocks that are not looking good. OLN. All right. Basic materials, chemical stocks. The US dollar may be also having negative impact on these stocks. Okay. DY. That's a nice look. Engineering stock. Nice look. Nice look. And Tree. Whew, look at that. That's a financial asset management. I like this look.
And guys, just to quickly answer some questions here, the yellow bars, the yellow candles means those are high volume bars to the short side. And if you see a white candle, that's a high volume bar to the long side. It just makes it easy for Roger, as opposed to looking down at the volume histogram below there. It just makes it easy for him to see in an instant high volume versus low volume.
Yeah, options are crap. Yeah, this is a very nice looking stock. You may want to take shares. That's a very nice looking stock. I'm going to add that to my watch list in the pit. Very nice. Add Tree to our short list. Okay. All right, let's do the long side now. Now, I just got an email from Jonathan, and Jonathan has been picking really nice looking stocks, like daily. His eyes been getting really good. So I want to take a look at some of his stocks, and maybe we'll add some of them to our watch list. MasterCard. I understand why he's looking at it. It's right now hitting the 8-day. I love it, Jonathan. I love it. It's very nice. Jonathan is in my little group with Richie and Matt and Jason, a couple other guys and gals. That's a nice look. Jonathan has another one, Target. I looked at Target. I like Target. Target was actually on my list, I think, this morning. Target looks very nice. Target. And this is a consumer discretionary stock. So actually, my wife was just in Target asking me if I want something to drink. I want her to buy some drinks. And then PayX looks very nice. Do you see why I'm showing you Jonathan's stocks? He picks really good stocks. He does. He really does. His eyes been getting Jonathan, I don't know if you're here or not. Great job. All right. Great job. Every one of them I'm adding to my watch list. Jonathan, from now on, you want to do my long list and my short list? If you do, you're more than welcome. Very nice. Beautiful stock. I can't say one negative thing about it. Okay, let's look at my list now. Team. I like Team. Software stock. I like Adobe still. Adobe did exactly what we thought it would do. We were long Adobe. We took profits here, and look at how it's looking now. It looks very, very nice. I like it. GEN. Yeah. And DBX. DBX still on our watch list. Very nice. Yeah. Very, very nice. Matt, do you have room for DBX anywhere? I'd really love if you can put it in there. Are you here?
Mm-hmm.
See if you have room for it somewhere, okay? You were asking me about a stocks earlier today. Another one that actually Jonathan gave me yesterday. Shark Ninja. Look at that. It's beautiful. Beautiful look. Okay. And this one, SHYM, Chime Financial. It's a tech stock. Very, very, very nice. Very, very nice. Okay, those are my stocks. Oh, Okta. The boys were talking about Okta this morning, and I looked at it. Now, folks, this is a perfect example of the conversation we had a few days ago about stocks that look good for day trading versus stocks that look good for swing trading. So I'm gonna give you the extreme here, okay? So look at Shark Ninja. What a name, right? Shark Ninja. What does this company do? Home furnishings. Okay.
Oh man, vacuum cleaners and
blenders. It's the best blender I've ever had. The Ninja blender. Oh my gosh, totally worth the money.
I need to get in on this. I'm very familiar with the stock, but I'm not familiar with the actual product. So I guess I got it backwards. So here's a perfect example. I'm going to show you two extremes, okay? So look at this stock, SN, okay? Or another one that actually Jonathan found, MasterCard.
And Roger, real quickly here, do we want to add NVIDIA to the longs?
Yes, NVIDIA. I thought yes.
I'll add that because I want to publish the list now. Okay, good.
Yeah, go ahead. And okay, so let's go back to MasterCard or Shark or this stock. Notice they're very close to the 8-day EMA, especially MasterCard is right on the 8-day EMA, which is very attractive because I like to buy stocks that are keying off the 8-day EMA. Now, would I buy this as a day trade? No, I wouldn't. Volume is not even at the average. There's nothing going on here, but it looks like a great swing trade. Matter of fact, I probably wouldn't even look at the intraday chart. I may because it happens to be right here, but I'm not like going to sit there and study it. But I really like this stock for a swing. So if I want to buy this stock, I'm going to look at completely different options, right? And time frame than if I was going to buy NVIDIA or what was that stock? The other one I just had, Okta, which actually look very similar. Both of these stocks are far away from the 8-day moving average. They have high volume on a daily chart, which you could see right here, really high volume. It's the second day of high volume. Look at NVIDIA, second day of high volume. So a lot of times folks will say to me, Roger, why is it sometimes you want to buy an option that expires in 3 days or 4 days? And why is it sometimes you're looking at an option that expires in 2-3 weeks? I'm looking at the relationship between the 8-day EMA and price, right? And I'm looking at volume. So, so for example, here, Target is sitting right at the 8-day EMA. It hasn't had high volume in a few days. It's just coming off here. It's coming off this spike here. You could see volume is declining fairly rapidly. Today we're only at 1.5 million. The average is 4.6, so it doesn't look like volume is high. The stock is just doing its thing. It's probably not for sure. It's probably just going to ride the 8-day EMA. Very similar to how this stock has been doing. Look, just riding along the 8-day EMA, but there's no high volume. So if a stock is deviated from the 8-day EMA, let's say it's like this. Again, NVIDIA, let's say it's like this, right? I'm willing to take that trade. I'm willing to take that trade because I have the volume behind me. I have the tailwind. And this goes to the analogy that I gave you guys. This goes with the analogy that I gave you guys either yesterday or the day before yesterday when I said, if I'm on a sailboat, right? If I'm on a sailboat and there's no wind at all, and if somebody says, hey, how about we take your boat behind us? Say it's a little sailboat. How about we take your boat behind us on our big boat and we'll just drop you off in the middle of the ocean, right? NVIDIA right now is in the middle of the ocean. This is where price is. This is land right here. This is land. And this is middle of the ocean. If I don't have tailwind, I don't want to be in the middle of the ocean. You understand? That means I'm in this position. See how close I am to I have something to lean on. I can go back. If I get too nervous about my boat, I could jump off and go and kiss the land and be friends with the bowling ball, right? You know, Robinson Crusoe. I'm trying to be funny here, but right?
It was a volleyball.
Volleyball, basketball. I don't know what it was. That movie was wanky.
But you made a great point, though.
He should have stopped while he was ahead with those volleyballs and basketballs. He was on a roll. I think he made like 3 Oscar winners in a row. I mean, what a madman that Tom Hanks. But anyway, you see how here we're right on land. So our boat, we have a sailboat. Somebody else is cracking up. I guess it's funny. Look, bowling ball, basketball. I don't know. It was a round ball. I don't know.
It was called Wilson.
Wilson, right,
Yeah,
right.
yeah, yeah, yeah.
Look, I mean, I wasn't. That wasn't the movie that I watched.
Oh, okay. Then maybe there
I
was a
just,
bowling ball.
I just remember seeing him talking to a ball. Like, well, why is he talking to a ball? Anyways, I'm a huge fan of Tom Hanks. I watch everything and anything he makes. Anyways, so here your rope is tied up to the to land. You can always go and if you're hungry, you could go to McDonald's, go to the bathroom. You're not concerned. And you don't have to worry about it. You don't need any wind. You're on land. You're like 10 feet from land, right? But here, I'm in the middle of the ocean. I better have some wind, or I'm not getting back to, my to the land. You guys understand? It's all about the tailwind. So just because a stock is bolting and making new highs or far away from the 8-day, it doesn't mean that the stock is not a good trade. It's just a very different type of trade. And I get a lot of emails and people are like, well, how come you like this one here, but this is overdone? And how come you like, so if I see this and if I see volume down here, I'm not going to want to buy this stock. But look at volume. It's only 12 o'clock and the bar is already turning white. And you're seeing exactly the same thing on what was it again? Okta. Seeing the same thing on Okta. Look at that volume. Look at how much volume is higher than normal. That means that institutions are 9.8 million shares. We're not the ones doing this. It's institutions that are propping it up. So I want you guys to understand the difference, and it's a very important difference. Okay.
So Roger, before we leave on both of those examples, because several people were asking, they're going, so Roger, in summary, what you're suggesting here is that if this is a trade, it's a day trade, not a swing trade.
Absolutely. Yes. So if you got the volume and you're away from the 8-day EMA, it's okay to take a day trip, but it's not to go overnight, because you know what happens when you go overnight and there's no tailwind? You end up on an island, Gilligan's Island, and then you spend 20 years there. So, and you don't want to do that. So you don't want to get stuck. So you want to only day trade. You only want to take day trips when you have volume, okay? And now listen, you could take a swing on volume too, but don't day trade when you don't have a volume. So you could swing on volume and you can day trade on volume, but you can only day trade, but you can only swing trade when there's no volume. Yep. Don't day trade. Basically, what I'm trying to say is don't day trade. And I see people doing this. There are a couple of forums out there, and there's good and bad traders there. And I see people doing it all the time, and it makes me cringe. They're taking day trades or scalps, and there's no volume. And I'm like, you're basically getting into randomness. Because remember, volume comes in and out, comes in and out, comes in and out. Here, like right here, I'm leaning on the 8-day EMA. I'm leaning on land. I have land. Every time the boat gets too far off, I bring it back to the shore. I'm like, okay, I got my land right here, But what if I'm in the middle of the ocean with sharks around me? You don't want to be there. So yes, just don't day trade if your volume is not higher than normal.
Right.
You need volume to day trade stocks, friends. You need volume to day trade stocks, and that's pretty much what I'm trying to tell you.
And then it's a nice comparison, Roger, with Shark Ninja, which you have up here right now, which is looking like a very, very sweet swing trade to take.
It is. It's looking like a really nice swing trade, like a beautiful swing trade. It actually looked even better yesterday when Jonathan gave it to me. He gave it to me yesterday. This is just a follow through. And this one too, right here. This looks like a really good swing trade right here. I like this one right here. See how it's just riding the 8-day?
Yep.
I was just riding the 8-day.
Not a lot of wicks. Yep.
This is what we're leaning on. We're not leaning on this. We're leaning on this, and it's still following this. But if this was over here, I want this to be really high up. Folks, I'm trying to make it as simple as possible. Don't day trade unless you have obscene volume. I can't emphasize that any more than that. And it's okay to be deviated from the 8-day if you have that volume. Okay? Because you're not leaning on the 8-day. You're not going to be there overnight. You're going to get out in the next hour or whatnot. Does that make sense? But if you have volume, you could swing and you could day trade. But usually by the time you get volume in a stock rally, it's already moving away from the 8-day EMA. So they kind of go together.
Right.
Because the 8 days EMA is roughly the average price of the last 5 trading sessions. Okay. All right. This is very important topics that we get, and we're getting a lot of new people in this room because of the 24-hour. A lot of Tim's folks are here, so I want to make sure you guys understand this,
Right.
and I want to make sure you use this. By the way, SMH is looking really nice right now, and Nasdaq is looking really nice right now, and mags are looking really nice right now. So just FYI, the market's moving higher. This is great. Matt, are you long?
Mm-hmm.
All right. All right.
That's terrific. So there were some quick questions here, Roger.
Yes.
I love this question from DT. He says, when Roger gives us these new lists, do we trash the earlier lists? So in other words, when you have the watch lists, a lot of people ask that question, Roger, do I hold on to these things? Do I replace, refresh?
As long as the stocks it has not broken below the 8-day EMA, the list is kosher. Or as long as you have volume on a stock that's not moving, it's still on average. I think a list is good for about 48 hours. 48 hours. After 48 hours, because what happens is if the stock still looks good, I'll just add it again on another list. You guys have seen me mention the same stock sometimes 30 times in a row. Mm-hmm. That's because I still like the stock. Like Nike. Nike's a perfect example. I think I've mentioned Nike every day this week, Raleigh, on the short list. That means price. That means it's still a good trade, and even though PDD is still moving, it's still a good trade to the downside. It's still at the 50. It's still at the average. It hasn't run away from the average. I mean, it's not that far away from the 8-day either.
But I think people also need to understand that the pre-market list, it's pre-market. The market's not open yet, right? And so Roger's doing some pre-market analysis. When the market opens, things can change, and that's where you get an update, during midday, because now the market is open, and Roger has better clarity as to what's really moving.
Exactly.
Another quick question that came up here, Roger. Let me see. Boss basically said, "Hey, Roger, why is the 200-day moving average important?"
Oh, that's a great question. That's a great. Who's the person asking the question?
Boss,
the 200-day may be the most important one. The 200-day is a gauge, not gauge, a gauge, not gouge. It's a gauge that institutions use to determine whether a stock is still being positive or negative. And that's the broadest gauge. So, for example, if I look at the 200-day line, if I see a stock below the 200 and it's crossing above the 200 to the upside, that's a very bullish sign for a stock. Similarly, if a stock is below the 200-day moving average, institutions tend to stop buying it. One of the biggest jobs that institutions do and they do it very well, is they have to cover their ass. Because they always have to explain to their boss why they're doing what they're doing, and it always has to be from a not a perspective of greed, but from a perspective of fear. So if my boss asks me, Roger, why are you buying Coca-Cola? And I say, well, it just went above the 200-day moving average. Oh, okay, that's great. If I buy Coca-Cola and let's say in the end it'll make money, but I bought it and it's below the 200-day, he's going to give me an eye. He's going to look at me like, are you? I'm telling you, this is how institutional managers think. They think about the 200-day line and they think about the 50-day line. The 200-day line is this still a buy or is this a sell? If a stock is below the 200-day moving average, there are tons and tons of mutual funds who will just stop buying that stock till it's back above the 200-day moving average. So the 200-day moving average is your baseline barometer for bullishness and bearishness. The 50-day moving average is a little different. The 50-day moving average is, should we continue accumulating this stock? Is it's still a good buy, or should we wait? So if a stock is between the 200 and the 50, they may not sell it, but they'll stop buying it. Once it gets above the 50, they'll buy it even more and more, because that means the stock is becoming more and more bullish and the bias is becoming more and more favorable. So the 200-day and the 50-day are very important barometers for institutions. What is our job? What is the only job that I have? My job is to tell you what institutions are buying and what institutions are selling. If I could always gauge what institutions are buying or selling, that will always be on the right side of the market, right? So we're always looking for stocks, unless we're scalping or we're looking for very short-term trades. We're looking like volume trades. We're looking for stocks that are trading above the 200-day moving average. I actually prefer to trade stocks that are, I call it the American flag, because my flag here is red, white, and blue. You could see the red, the white, and the blue. This is the 50. This is the 100. This is the 200. When a stock is bearish, it'll usually trade below the American flag, below the 200, 100, and the 50. When a stock is bullish, it'll trade above the American flag, red, white, and blue. So for example, let's look at my long list, okay? NVIDIA, look where the flag is. It's below me. Look at Palantir. Look at red, white, and blue. Look at Team. See? Look at XYZ. See the American flag, red, white, and blue? Now let's look at my short list, VFC. Red, white, and blue. Deck. Red, white, and blue. So you don't have to have it red, white, and blue. I just happen to have those colors, and I've had it here for probably 15, 20 years, maybe more. So, but you can have them any color you want. But I always tell folks, if you're going long, you want to be above the American flag. If you're going short, you want to be below the American flag. And it's just an easy way to remember it. But you'll notice the vast majority of stocks on my watch list longs are above the American flag, the 100, the 250, and above if I'm going long. Hopefully that answers your question, and that's a very important question, which is why I wanted to spend a little time on it. All right, next question.
Yeah, so other questions that we had here. Hold on for a minute, Roger. Let me just bring this up here. I was answering some questions here in the room. That basically covers what I had here so far. You talked about the 200 and you talked about the 50. You skipped over the 100.
I covered it in VIP room. Okay. So here's the thing about the 100. The 100 is like it's also an institutional indicator. It's an older institutional indicator. Modern hedge funds don't use it as much. They mostly use the 200 and the 50. But I'm an old-fashioned kind of guy. I'm old school, and I know that some still use it, so I have it on here. But it's not as predominant as the 50 or the 200. So it's just another one of those institutional indicators. Some use it because it's a 6-month level versus a 200, which is a 1-year level. But it's a barometer of how stocks have been doing on a semi-annual basis. Okay, and a lot of institutions, if a stock is not above a certain level at a semi-annual basis, they will stop buying until it is. So that's what it really is. If you think about it, the market has about 200 days, trading days a year, about 100 on a 6-month. So that's what that does. It's just another institutional indicator. To be on the right side of the market, especially if you're a beginner, try to buy when we're above all three and try to sell when we're below all three. You'll find me doing that probably 95 out of 100 times. And if I'm not, please call me out on it, because you guys see me trade. Everybody here would probably say, yeah, he does that. Notice I'm usually near 52-week highs or 52-week lows or 90-day high and those tend to be above or below the average.
Excellent, Roger.
Any other questions I can answer?
I think we're good for now.
Okay.
But and by the way, there were some questions about debit spreads. And I know you're going to kind of wrap up with that.
Yeah, I am. So should we, maybe folks want to ask me questions about debit spreads? Do you guys want to ask me questions, or do you just want me to show you a couple of debit spreads and examples? Because I want to, if there's specific questions, I want to answer those questions.
Well, we know that you have a formula, Roger, that you like. There's a very straightforward formula. And what I'm going to do is I'm going to post that in the chat panel as you talk about it.
Yeah. So folks, it's really, really straightforward. When I do debit spreads, I want to make sure that I'm paying less than 50% of the difference between strikes. So let's just use this as you know what, Raleigh, I'm going to use calls because beginners seem to understand upside trades easier than downside trades. So I'm going to go ahead and use calls. And by the way, I have a link. Tim and I are doing to his room a class at 2:45, I believe. Do you have a link for that, Raleigh?
I don't have a link for that.
I do. I asked
Okay.
them for it earlier, but I don't have it in front of me. I'm going to find it right now. And I'm going to post it for you guys so you guys have that link so that you guys can I have too many things going. Too many windows open. Here we go. All right, there we go. That here it is. No, that's not to his link. Okay, it's here. This is the best I have. This is the best I've got. All right. If you guys missed that presentation or you want to see it again, sign up right there on to this. It's a limited time access to the program. Okay. All right. So let me do a long stock. Let me do Palantir because I still like Palantir. It still looks good. It's starting to get a little overextended, but this is the stock we took profit on. And we had a debit spread on it, by the way, most of you. So I'll use this as an example, okay? Delete this slide. So let's say I wanted to go long Palantir, and let's say I wanted to go long Palantir about 3 weeks out. About 3 weeks out, okay? Earnings are not till 11. We've got plenty of time there. So what I usually do with debit spreads is I don't go 0.70 in the money. I go 0.50 in the money. So the first thing I would do is I would come out here and I would say, okay, this is a swing trade. My swing trades are usually 3 to 6 weeks. So let's just go 4 weeks, okay? 4 weeks right here. Here's 4 weeks. So if you wanted to buy a call option, all right, if you wanted to buy a call option, this would be the strike price, about 68 delta. And you could see you would pay about $2,050 for it, okay? Which is kind of a, folks, what I'm talking about right now does not apply to 24-hour payouts. I'm just talking about regular old stock debit spreads, okay? The debit spreads is what we do in 24-hour, but we don't do it on stocks. So take what I'm telling you right now. This only applies to stocks. Let's not get confused, Elizabeth, okay? All right, I'm going to close the chat. Okay, so let's say I want to just buy a stock and I want to swing Palantir. If I wanted to buy the option and swing Palantir, I'd go right here, about 29 days out, maybe 22 days out, and I'd go to a delta of about 6 right here, 67 to 71, somewhere in this ballpark. And you could see whether I go here or here, these suckers are close to $2,000, right? Right? That's expensive. A lot of people can't afford $2,000 for a spread, and some people just don't want to spend $2,000 on a spread on an option. So, what I propose is doing a debit spread instead, and let's see how much lower we can bring this price to. Okay, so let's just say that we chose 22 days out. Okay. And we want to do a debit spread. Well, with a debit spread, we're doing a different type of trade. So I don't have to go out to a delta of 0.70. I can go to right at the money. At the money is delta 0.50. Okay. So this is going to be our starting point right here. Delta. I don't look at the strike price. I don't care what the strike price is. I look at the delta. So here's my delta. I don't want to go 49. I want to go slightly above 50 or 50. So I would go right here. I would go right here and start here. And here's what I'm trying to do. I'm trying to pay no more than 50% of the spread. What is the spread? Well, we're going to start with one strike price. We're going to buy the 190 and we're going to sell the 192.50. What's the difference between this spread, Raleigh? It's $2.50, right?
$2.50, yep.
What's half of that? It's $1.25, which means I can't pay more than $1.25 for this spread. If I can pay less than $1.25, I'll stay with it. If not, then I'll move on to 190 versus 195. So let's do a social experiment. How much is this one? 190. It's 705. How much is this one? 607. This is less than $1.25. This is about $1, right? About 97, 98 cents, right? 98 cents. Less than $1.25. We don't have to go further. But let's say this was $1.35. Uh-oh. What's 190 versus 195? How much is that? $5. What's 50% of that? $2.50. What's the most I could spend? $2.50. How much is this spread? 705 versus 523. What's the difference between 705 and 523? It's less than $2, right? It's less than $2. It's about $1.75. So we could do this one too. So either way, I can do that. And I can. Why am I doing less than 50%? Because I want to try to make 100% max on this trade if possible. So I would be buying the 190 and I would be selling the 192.50. How did I decide that? How did I decide to buy the 190? By looking at the delta. The delta is over 50, right around 50. Just go right here. It's got good volume too. That's 190. How do I figure out which one I'm going to sell? I look at the strike, the difference between these and price. I divide it in half and I look at the premium. Here's $1.25. Here's $2.50. What's half of that? $1.25. What's here? It's certainly less than $1.25. So what were we able to accomplish? Instead of paying $2,000 for the trade, we ended up paying we ended up paying $100 for the trade. So for all of you who are sitting there going, this is too complicated. It's too complicated. Okay, fine. Don't figure it out and pay $2,000, and everybody who figures it out is going to pay $100. And you keep telling me how complicated it is. Keep crying and telling me. I think it'll be much more painful to lose $2,000 instead of $100 on the same move, don't you?
Yeah, and Roger, the other thing is, not only is it cheaper, Roger, your potential for a winning trade is actually higher than if you bought the call at $2,000, and the thing's got to explode for you to make money.
Right, because look, if I bought a call for, thank you for saying that. If I bought a call for $2,000, right, and let's say I want to make 50%, I got to make $1,000 back. That stock's got to move. But in this case, I bought a trade for 100. The trade has to move like 2 points, 3 points for me to make my nut.
The strike. Yep.
Yeah. So I'm spending 20 times less, 19 times less, and the move has to be 4 times smaller. And all I'm doing is buying one and selling one, buying one and selling one. Look, I'm looking at these to see the difference. The difference is $2.50. Remember my rule? I don't pay more than 50%. All you have to do is see the difference between this and the next strike price. You could see it's $2.50 and divide it in half. Or take 190, 195. Half of that is $2.50. It's $5. What's 195 minus 190? It's 5. What's 5 divided in half? $2.50. Can't spend more than $2.50. How complicated is that? Where do you start? Delta of half. So all you have to remember is swing trade 3 to 4 weeks out, day trade 4 to 8 days out. That's it. And then the delta will tell you everything else you need to know. Here's the delta. Go across. Oh, 190. Okay. So now I have my anchor. This is my anchor strike. And what am I selling? Okay, can I do this one? Well, let's see. How much premium do I have to pay? Well, it's $2.50 divided in half. It's $1.25. How much? I move here, and it's $1. $1 is less than $1.20 than $1.25. Mazel tov, we have a boy. Okay, it's not that complicated, folks. And this dollar, if this thing moves 50 cents, let's say the stock moves $1, this thing moves 50 cents. I made 50% return. So if you want to keep bitching and moaning of how hard it is and how complicated it is and how you don't want to do it, go ahead. Meanwhile, the rest of us will be spending 19 times less and looking for 4 times less leverage to make our money. Your choice. Okay. All right. I'm trying to be as compelling as possible here.
No, you are. You're making great sense. And once again, folks, we really do respect that if this is new to you, that it's like anything new. It may take a little while for you to grab your head around it. What you have to really trust us on, and many of the people that have commented in the chat panel, is it really isn't that difficult once you spend a little bit of time with it.
Because it's the same thing. It's repetitive.
Absolutely.
See, if I was saying, okay, I'm going to show you how to do a straddle, and then here you do a butterfly, and here you do whoa, hold on a second. It's just one trade. You're buying something, right? Like you would just buy a call, and then you're just hedging it with something else. And I'm giving you 2 simple rules to figure out how to do it. 50% the difference between those two strike prices is the max you can pay. All right, folks.
Excellent.
Now, Raleigh, you're gonna show folks a replay today, right?
But before we get to that, just a couple of things I want to share with people. Yeah. So, Roger and I, we were talking to our team, and we know that we have a number of people that are here with us, for example, that are from Tim's group, if you will, and Tim students. And primarily, we know you do a lot of stock trading, and we do a lot of options trading here. But what we did is and I'm putting this link here, we put together, there's a link for a special presentation that we're doing next Monday, where Roger's going to be sharing with you another one of his great tools for how he likes to day trade the markets, okay?
Yes.
And there's a link for you there, and anybody's welcome to join, but we know for those of you that are in Tim's room, you might really appreciate that. So I wanted to put that there. You can click on that link, you can read about it, you can register it, and it's going to follow next week's VIP trade room. So we'll do some education, and then we'll do that.
Here's now. I hope I want to talk to Tim's people right now. Okay, I want to talk to you guys, just you guys, because my folks already know that. I know Tim's trades a lot of small caps, and I know you can buy small caps for like $1 and sell them for $1.20, $1.30. I'm going to tell you guys something. If you think that's leverage, you haven't seen anything yet. Wait till you see options. Wait till you see how. Matt, what was give me the trade yesterday you did in the. Hold on a second. Let me show you guys something. I want to show you guys something cool. Hold on. You want to talk leverage? Let me show you leverage, okay? For all of you big shot leverage guys, I want to show you some leverage, okay? Where's my okay, here it is. So this is a members area we have called Trading Zone Live. So I want to show you what real leverage is, okay? That's me and my cat. But let me show you what real leverage is. It was yesterday, right, Matt? The bonus trade you did?
No, 2 days ago.
2 days ago on the 25th, right? Yeah. Okay. So check this out, okay? He bought a trade at 346. He bought an option for 9 cents and closed it out at 36 cents 8 minutes later. So all of you, I love my small caps too. I have a small trading program, but if you guys think Tim's program gives you leverage, you should think again. You get way more leverage with options, okay? Look, in at 9 cents, out at 36 cents in 8 minutes. And I'll leave you at that, okay? So if you guys think you don't need to learn options because you have it all made with the small caps, you haven't seen anything yet. Okay? You're not even in the right stratosphere. And you have and there's 100 times more opportunities. All right? So get excited, folks. Get really excited. You're in for a treat over the next several months. All right, Raleigh, show them the show. If you have any questions, I'll be live with Tim at 2:45 today in his room. I've never been in his room before. Hopefully people don't boo me out of there. But
they're going to love you, Roger.
I hope so. But folks, I'm really telling you, there are options and spreads, something to get excited about. And if it's an expensive option, just do a debit spread and cut your cost in from 2,000. I showed yesterday Micron trades where the spread was where the option was $5,000 or $7,000, and you could have done an option spread for $200.
Wow.
All right. Raleigh, thank you so much for having me today, as usual. And go ahead, folks. This is a presentation we did a few days ago. If you have any questions, roger@rogerscott.com, and I'll be live again in an hour and 40 minutes. Ciao.
That sounds great. Thank you, Roger. And folks, before I get started, I just want to let you know that I put in the chat panel that this is a live presentation. It is being recorded. And when I close today's session, it will be, it takes about 2 hours to go ahead and render and edit it, and it's going to be put in our Vimeo replay library. That is something that you can go ahead and you can bookmark that, and you can see all of Roger's replays there. I've also included Roger's email address, Roger at rogerscott.com. And if you have any questions about trades, trading questions that are out there or about his programs, things of that nature, send him an email. He wants to hear from you, and you will be amazed at how quickly he responds. I've also included Roger's public Telegram link there, and that's something that you're probably going to want to join if you don't have it. Roger puts an awful lot of valuable information every day in that public channel. I'll give you an example. Every morning when he looks at the indexes or the commodities that he's following, he basically plots for us the key support and resistance levels that are important if we're looking to day trade those. He copies and he pastes those and he puts them along with commentary in his public Telegram channel. Now, what we've done here, folks, is that I've got a replay of a presentation that Roger and Tim did last Sunday when we kicked off the 24-hour payout program. I'm going to be with you live here in the chat panel. I'll answer any questions that you have during the session, but we wanted to share this with you because there's a lot of people that didn't get a chance to see this, and we thought this would be a great way to do it. Tim wasn't available today to do this live, so we said, hey, let's at least do the replay. And with that, folks, let me go ahead and get ready to do this. A couple things I need to do. Let's change this. Bum, bum. Go here and...
So guys, friendly reminder, the profits and performance shown are not typical. Now, we make no future earnings claims and you may lose money. The majority of trades expressed are from historical back-tested data unless otherwise stated. Now, in order to demonstrate the potential of this system over the last 15 months, the average winning return per day would have been a $523 profit based on a $3,500 starting stake, with an average daily ROI net of winners and losers at 7% per day and a 92.3% accuracy rate. Now, every example is based on that same starting investment, unless otherwise stated. However, trades can be taken with less than $100. The method has been live traded since August 6th, which you will see some real-time examples of today. Now, as always, we cannot guarantee any specific future results, because there's always a high degree of risk involved in any trading. You can see our terms on the homepage for more information. And remember, we just want to stress it, in trading, there's always losing trades. No system or strategy prints out winning trades 100% of the time. The purpose of our work is to help give folks an edge in the markets. You shouldn't be trading with any money that you can't afford to lose.
Absolutely.
So as I mentioned, everyone, I would like to thank you all for being here. My name, maybe you know me, maybe you don't. If you don't, my name is Tim Bowen. Now, before we get going, I want you to take a close look at this redacted document. What you're looking at is a special perk set up by market operators just recently. Now, it's a perk that opens the door for regular folks to target extra income every single day of the week from any normal brokerage account. So I'm talking about payments that our study shows were worth right around $500 in extra income each day that the markets are open, usually hitting our payout within 24 hours of opening that trade. For example, Monday, July 27th, folks could have placed a quick trade that day and came back the next day to an extra $529 sitting in their account just 24 hours later. Or how about Tuesday of that same week? Okay, Tuesday, July 28th, taking about 30 seconds to set the trade and came back to the next morning to a $525 payout. And for Wednesday, it would have been no different. This time landing $535 in under 24 hours. Then Thursday, July 30th, set the trade right before the market closed, $529 overnight.
Starting to see a theme here.
Yeah, exactly. Very consistent. Yeah. And then to wrap up that week, very strong, Friday, July 31st, just jumped in with a few clicks and grabbed another $500 plus over the weekend.
Beautiful.
Now, keep in mind, with this special perk, there's nothing crazy you have to do on your end. You don't need to time the markets. It's not easy. You don't even need to pick the right stock, and you don't even have to manually close these trades if you don't want to. In fact, with our trade, those hurdles are all eliminated, all three solved. All we have to do is set the same trade on the same ticker at the same time each and every day the market's open. And if you can handle that, which I hope you can, then you have exactly what it takes to target what could be the next $500 payout with us, me and Roger. Now, for example, like what folks could have seen the following week in August. Monday, August 3rd, over $500 overnight. Tuesday, August 4th, $552 in under 24 hours. Wednesday, August 5th, $541 into the next day. And Thursday, August 6th, $529 by morning. And then Friday, August 7th, over the weekend, $548. And it was the same story the next weekend in August too. Monday, $529 in 24 hours. Tuesday, $535 overnight. Wednesday, $561 the same day. And then Thursday, $541 in exactly 24 hours. And then Friday, $525 when it automatically closed out.
After seeing this, it makes me want the market to be open on Saturday and Sunday too.
I always say Friday night's my least favorite time of the week. I tell you, can't wait till Monday morning.
Right.
So all in all, that would have been enough for folks to grab an extra $8,000 plus in income over that 3-week period. Now, I know that for some of you, a win streak like that might feel like it's a stretch or even completely out of reach. But I want to assure you, with what we're showing you today, it's not really that uncommon at all. In fact, so far from the study, we've watched these daily opportunities hit with a 92.3% accuracy. And that's on more than 300 plus trade signals. So with that in mind, it really shouldn't shock you that we've seen win streaks of 22 trades in a row.
Wow. 28
trades in a row. And we even caught one stretch this year that stacked up 48 in a row.
Can you imagine? That's a pretty nice. That's nice.
Yeah, I mean, 48 in a row without taking a single loser. With each trade paying out right around $500 in roughly 24 hours. And ultimately, that's why Roger and I are here today to share this with you guys. So today, I'm teaming up with one of the most prestigious traders in America. And together, we're going to bring you a daily income opportunity unlike anything you've ever seen before. One that allows us to target right around $500 each and every single day of the week, each day the market's open. It's all thanks to a special perk set up just recently in the stock market. So listen, if that sounds appealing to you, and I'm hoping it does, then definitely stick around. We've got all kinds of detailed data, everything to explain this to you guys if you've never heard of it. Because in just a few minutes, we're going to unpack what this special perk is and the exact market anomaly that's driving all of it. Plus, we're going to invite you to join us live as we set up the next one on camera, giving anyone who follows along a shot to target extra $500 over the next 24 hours. So that being said, my friends, and Roger, thank you for being here. And thank you to all of you guys. This is the world premiere. This has never been seen before of the 24-hour payout plan. So like I mentioned a moment ago, my name is Tim Bowen. You might recognize me from my programs at Stocks to Trade, which have reached over 150,000 people worldwide. Or maybe you've been to one of my live trading seminars or read about me in the digital journal. Or maybe you've used one of my trading algorithms, which cost us over $1 million to design and has managed an 82.5% win rate across more than 7,000 trade signals.
Very impressive.
Thanks. Now, given my track record, I don't normally team up with other experts. I'm always pretty busy. But after stumbling upon this breakthrough and the market anomaly behind it, I knew I had to find somebody that could be a partner that was an expert in this field. I discovered the anomaly, but I needed someone to help me actually implement it, to basically make this dream turn into a reality. And that man is none other than Roger Scott, the guy right next to me. He's the head trader at Trading Pub. Now, Roger is one of the smartest and most diligent traders I've ever met or ever worked with. And not only does his work as a former hedge fund manager speak for itself, running 2 multi-million funds, but his trading partners have included the current economic advisor to the president, the top economist at Columbia University, and the youngest turtle trader. Plus, he's even managed money for one of the wealthiest families on the planet. And listen, you don't just accidentally get there, okay? But his past few years, his focus has kind of started to shift, spending his time teaching people the art of trading. And if you follow his work, then you probably know him as one from his flagship program called the Trading Pit, with a 94.6% win rate across 500 plus live alerts. Not bad. Well done.
Thank you.
Now, from what we've been hearing, and from which I've been hearing hundreds, if not thousands, of success stories from his top students, like Steven, who says, listening to Roger and following his trades has helped me tremendously. I started out with $5,000 and now I have $15,000. Patrick says, thanks for all you do, Roger. I was able to make $60,000 in 3 months. Woo! David says, I just hit a 200% on my account this year. Look at my performance compared to the market. Thank you, Roger. And now today, guys, we're joining forces to ultimately take things to the next level. And it's a new way to target $500 each and every trading day from any regular brokerage account. So Roger, again, I know I've thanked you a couple times, but I really want to thank you for helping me with this and joining me on a Sunday. Okay. Sunday, you know, it's usually a day for family, but I appreciate you coming in here. So that being said, why don't you show everyone exactly what we've been working on?
Love to. Tim, I'm really, really excited for this class, and I cannot wait to hear from everyone in the room once they get started with the 24-hour payout plan today. Now, today, we want to empower you. We want to show you how after just a few minutes of your time and a couple of clicks inside your brokerage account, you could set up your very own 24-hour payout plan inside the stock market. It's all thanks to a market anomaly, an anomaly that's shown the power to pay $500 on average in income each day when things go as planned. And the timing for this brand new briefing, it really couldn't be any better. Right now, some of the hardest working folks are getting destroyed by inflation, annihilated. And that's why we saw the average savings account hit the lowest level since 2008. That's horrible.
Yeah, especially if you think of what was happening in 2008, the financial crisis, etc.
It was ugly. And if you ever got, even if you got a raise last year, it probably doesn't feel like it by making much of a difference at the end of the day. And that's left folks looking anywhere, and I mean anywhere they can, to generate extra income to cover their bills. Now, of course, most folks think that the only way to generate extra income is by picking up a second job at Walmart or working overtime and late weekend nights. But with what we're about to show you today, and I'm really excited about this, anyone can start targeting extra income within the next 24 hours right from the comfort of your sofa. It doesn't matter if you have $1 million in your account or a student, or if you're starting out with just a few thousands. All you need is a standard brokerage account, an internet connection, a few minutes to set the trade each day. And as you'll see, it doesn't matter if you're in a bull market or a bear market or in a full-blown recession. Our trade is designed with the power to pay in both the best times and the worst of times. For example, let's take a jump back to March of this year, shall we? Now, if you don't remember, what took place in March? Well, just say it was a rough time for most investors, all right? I'll leave it at that. Between rising costs of living and war breaking out, that left investors skittish and the stock market curling over, dropping 10% by the end of March into correction territory. Now, let's say someone had $3,500 invested. That's the amount we'll be referring to with each example today, folks. Now, you could go smaller, you can go bigger, but in our example, it'll be a $3,500 investment for our purposes, okay? Well, in the first week in March, folks invested in the S&P, they would have lost money. A few $100 at least. But with the 24-hour payout plan, they could have seen a much, much different story. Monday, March 2nd, let's set the trade that day and come back $567 a few hours later. Tuesday, March 3rd, take a quick moment to place a trade and ba-boom, $529 in 24 hours. Wednesday, March 4th, same story, folks. Another 500 plus overnight. Thursday, March 5th, place the trade in a regular brokerage account and come back to $560 on a choppy market move. And Friday, March 6th, hit a few buttons to jump in. That won't take you very long. This is not an Einstein type of trade. Find an extra $554 in your account over the weekend as the whiplash continued. After those 5 consecutive trades, that could have been an extra $2,740 hitting the account that week, all from taking the basic trade at the same time every day. I'm getting very excited about this.
I mean, that's exactly right, Roger. With our trade, I mean, it couldn't be any more straightforward. I mean, it's really crazy how simple this is. Now, of course, before we get too far along, let me remind everyone, like with any strategy, there's bound to be winners and losers along the way. And when it comes to trading, there is no instant income magic pill guaranteed to make you rich overnight. But that's not what we're going for here. Instead, it's literally the exact opposite of a get-rich-quick scheme, okay? What we're showing you today is meant to supplement your income with a chance to target right around $500 each day the market's open, all by leveraging a very specific market anomaly that I don't think anyone else is taking advantage of. And I've worked incredibly hard to optimize this method to stack the probability in our favor so that every 9 out of 10 trades, we expect it to be on the winning side. For example, like with the next week after what the week Roger talked about. Now, this week was another ugly one for the overall stock market. Global tensions escalated. I mean, the stock market was like a roller coaster. Up big, down big. It was like nonstop chop. But for folks following the 24-hour payout plan, there was no need to even look at the chart. Like, that's the crazy thing, okay? All you had to do was set the same trade on the same ticker at the same time each day. Now,
that's very consistent.
Yeah, I mean, that's like, I underlined those 3 on purpose to show the fact it's the same trade, same ticker, and it's even the same time each day. So you can plan around this. So on Monday, over $500 in profits. Tuesday, another over $500 day. Wednesday, $529. Thursday, another over $500 day. And then wrapped up Friday with another $500 plus day at $522.
Beautiful.
So 5 for 5 again that week for a grand total of $2,639 in the pocket.
That's nice to end the week.
Yeah, I mean, think about that for a moment. Since the pandemic, I mean, we all know the cost of living has gone skyward. Gas prices, food prices, mortgage rates, everything's up, okay? It's going out of control, and I don't really see anything changing anytime soon. I mean, there's really no going back. Over the past few years, we watched the average cost of a new mortgage go from $1,427 all the way to over $2,100 a month. I mean, that's roughly $800 a month. That's a $700 increase every single month. And it's not like people have a lot of extra change laying around to make up the difference either. I mean, not unless you're sitting on a pretty good nest egg to begin with. But anyone who would have taken advantage of the 24-hour payout plan could have more than covered the cost of that average monthly mortgage without needing to slave away at a desk job, working extra hours, nights and weekends to make it happen. Instead, anyone could have done just a few clicks each day and then went off to enjoy life the fullest. Maybe like me, sitting in a tree stand or fishing for bass, okay?
Now, Tim, you've literally nailed it right on the head. Now, folks, if you're skeptical, you've got every right to be. Trading can be hard, and that's because there are so many variables you have to get right. You have to pick the right ticker. You got to time the entry. Then you got to time up the exit, and you got to be right on the direction as well. If any of those variables misses the mark, well, the trade loses. But with a 24-hour payout plan, you don't actually have to stress about any of that. In fact, with the market anomaly that we're tapping into, the margin of error is so wide that, frankly, it's hard to be wrong.
Right.
We'll explain why in just a second, but that's the reason we've seen a 92.3% accuracy rate so far from the study. And in most cases, the markets can go higher, lower, or nowhere over the next 24 hours, and yet we still have a shot to collect a $500 daily payout. For example, like at the beginning of June, Now, in this case, the market didn't fall double-digit percentage points, but trading conditions, let's just say they were still far from ideal. With this new Fed chair promising to keep rates higher for longer, it created a stretch of very volatile days. Now, most traders typically avoid this type of volatility, but with the trade we're using, it doesn't matter all that much. The markets can go higher, it can go lower, and it can stay flat over the next 24 hours. Yet, each scenario still allows us to target our 24-hour payout. For example, look what happened on June 1st. In this case, the market ticked slightly higher overnight. And for our trade, it would have been enough to bank $556 in just 24 hours. That's nice. Then the next day, Tuesday, June 2nd, this time the stock market fell overnight, dropping about 1%. Not that bad during that time. But again, it didn't matter for our trade, and folks could have automatically pocketed, you guessed it, another $529. And then the next day, June 3rd, the market bounced around, going nowhere fast. Over the stretch, investors made next to nothing. It was hurry up and wait. But with the 24-hour payout plan, that would have been worth another $529. And one more just for fun. Let's do it. Why not? Let's look at June 4th. This time, the market got absolutely hammered overnight, falling 3%. That's respectable. Most people would absolutely panic when they saw price action like that. But for us, it wouldn't have made a dent in our portfolio. In fact, anyone could have still walked away with an extra $554. So despite the market posting 4 very different outcomes, our trade would have handed out 4 different winners. All while every major index, bonds, crypto, and even gold, they were all in the toilet, Tim. It was a mess.
Yeah, crypto down 12%, gold. I mean, right. You don't see 5% moves in gold every day.
It was a mess. Now, I don't want to sound too cheesy or anything, okay, folks? But I think we can all agree that it would have been pretty sweet to see an extra $500 hit the account each day over that stretch, wouldn't it? One day, it could have covered maybe dinner with friends. The next day, maybe a round of golf at the top course you've been wanting to play at for a while. Well, next, grab tickets to your favorite ball game or a concert. Or maybe that $500 each day could have helped knock down that never-ending cycle of bills. However folks would have wanted to use that money, it really doesn't matter. It's kind of like having a side hustle. But, you know, when I say side hustle, I'm thinking of Uber. This is not Uber, but driving for Uber, but without putting that money at risk. Now,
Roger, listen, I couldn't have said any better myself. I mean, listen, I respect side hustles. I use Ubers all the time and stuff, but man, it's just so much time.
Yes.
So I couldn't have said any better. Now, of course, if you have a job, which probably a lot of you do, we're not telling you to call your boss and quit, okay? Don't do that. If you've been steadily saving for retirement, don't stop that either. Be smart, okay? Make good decisions. What we're sharing with you today is a brand new way to help pad your income stream with a technique that I don't think anyone else is using. And that's why we're so excited about this brand new project, and that's why we teamed up to be on a mission here. So today we want to show you guys how to unlock the daily income opportunities hidden inside that document. All starting with the next trade we'll be taking together live on camera so that you can begin targeting the newest $500 opportunity within the next 24 hours. Now, before we show you how it all comes together, you have to understand exactly what the market anomaly driving all of this truly is. So take a look at this chart. Get ready to take some notes, okay? This dates all the way back from 1993 through this year. What you're looking at is the total market return from owning the S&P 500 during the day versus owning it overnight. Now that red area here shows you the net return from holding the S&P during the market hours of 9:30 to 4 p.m. Eastern. Now, if you're squinting and having a hard time even seeing that red line, I don't blame you. That's because the net return from owning stocks during the day is so small that it barely registers relative to the other one. Now, the green area is the net return that happened when the market was technically closed. That's the overnight market. This is the key here. So you can clearly see there's almost no money in holding the S&P 500 during the holding day or during the trading day. It's a stock market has been mostly flat from open to close. All of the best returns have ultimately come overnight in the 24-hour market. And that, my friends, and that's why I talked to Roger, is where our opportunity all begins. By taking the same trade on the same ticker at the same time before the markets close each day, we've been able to get in front of this market anomaly that's overnight to target $500 each and every day that the market is open, usually hitting our payout in 24 hours or often less. Now, for example, Monday, June 29th, just a couple weeks ago, folks could have placed a trade the day before the market closed. And sure enough, markets popped overnight like they usually do on any given day. And anyone following along could have come back to an extra $500 plus automatically posted in the account. Then on Tuesday, June 30th, taking the trade before the markets closed. And to no surprise, markets went racing higher at the next open, which would have been more than enough to hit that $500 plus daily goal again by the opening bell. Then on Wednesday, same story. Set the trade to take advantage of this overnight market anomaly and came back to another $529 by morning. Even as the stock market went on to stall out for the rest of the day, as it often does. Afternoons get pretty slow.
Fizzles out.
Yeah, yep. Then on Thursday of that week, folks could have set their trade that day and came back to $531 as the markets moved higher by the next open. Then for Friday, well, that was a week to go off and celebrate the long 4th of July weekend. But anyone who followed along that week could have enjoyed the festivities with a little bit more extra, an extra $2,240 in hand. Pretty solid holiday weekend.
Make the day a little shinier.
Yeah, that'll buy a lot of beer and hot dogs.
Exactly.
Yeah. So here's the thing. This data has been around for years, proving overnight trading is where the real money is at. But up until now, no one I know has been able to figure out a way to regularly profit from it. Now, here's why. Traditionally, as traders, we need big moves to make any sort of meaningful returns, right? And unfortunately, the market anomaly only lends itself to tiny moves of 0.04% on average for each overnight session. It's not really enough movement to get me that excited, okay? And I don't want to wait 30 years to see a half decent return either. But just recently I began to wonder, what if there was a way to actually amplify these overnight moves using options? Again, I discovered this, but I needed someone else to help me figure out actually how to implement it. So that would allow us to set up our trade in a manner that's not reliant on massive moves to see our payout, where even the smallest overnight moves could give us a shot at meaningful income up to 5 times per week, basically every day of the week that the market's open. And that's why I called in Roger Scott to help me figure out this mission. I had the idea, he had to help me implement it. Now, I went to him because a lot of you guys might know him well. If you don't know him, he's kind of known as America's #1 options trader with an audited 90+% win rate on over 500 live trade signals. And when he showed me what he's about to show you, listen, I about fell out of my chair because I was like, finally, there's a way. Because not only was he able to turn the most boring 0.04% on average moves into a consistent $500 opportunities, but he was also able to do it in a manner where even some of the worst overnight drops would still have hit our $500 daily goal with ease, allowing us to automatically nail our payout, even in many cases when the market went against us. And by doing so, helping eliminate most of the risk that comes with options trading. So Roger, I've said enough. Why don't you show them all of the magic?
Thank you. Thank you for those nice words, Tim. I appreciate it. I'd really be happy to. Now, folks, we've been able to take this overnight market anomaly and pair it with a little known phenomena buried deep inside the options market. It's one that's been studied extensively by Harvard, Yale, and even Charles Schwab. And legendary hedge fund managers like Bill Ackman and Carl Icahn regularly use it to grow their portfolio. Ken Griffin, the CEO of Citadel, used it to catapult himself into the top 50 wealthiest people in the world. Oh, don't get me started with Nancy Pelosi. But yes, she uses it too. What a surprise, right? Because with this phenomena, it's so much easier to win. Now, if you're not familiar with options, don't worry. You don't need to understand all this to take advantage of the 24-hour payout plan. But I do want to walk you through it because I want you to have that aha light bulb moment, whatever you want to call it, just like we did. You see, when I say options, most people think of buying options in hopes that the stock rallies higher. The problem with buying options, the way most people do, is they don't tend to pay off often, even when you do get the direction right. And that's frustrating for folks. And that's because with most options out there, you need a big, big move on the stock to start making money, which, as Tim showed us, doesn't happen at all these days. It used to happen in the old days, but now with the overnight markets, even with this consistent overnight anomaly, and that's why studies like the one done at Chicago Mercantile Exchange report that 76% of options expire worthless. In another report, a contributing writer at the Financial Post studied options extensively. He found that up to 90% of all option buyers actually lose money on their trading at expiration, even if they're right about the underlying move.
Which again is frustrating. Yeah.
Of course, of course. And in the instance where you're on the wrong side of the move, which, as we all know, does happen, that leaves most option traders losing everything. However, with the technique we're using in the 24-hour payout plan, we're not simply going out and buying options like most people do. And we're not buying lotto tickets hoping they eventually become profitable. We don't play that game. Instead, we're leveraging the options where the strike price is well below the current price of the stock. The options that are already profitable and quite likely getting more valuable every minute. And get this, because these options are so far in the money, we don't need a big directional move to make our money. We don't have to worry if the market flatlines. In fact, we still hit our $500 daily goal even when the market goes against us in the overnight session. And that's because with the options we're using in the 24-hour payout plan, we set up the trade in a specific way that will pay us as long as the stock stays above our strike price. For example, like with the next trade in July, Monday, July 6th. In this case, the markets could have gone to the moon or chopped around sideways, or it could have gone slightly lower. And Tim, we still hit our 24-hour payout.
Nice.
In this case, the market did a bounce around a little bit, I'll be honest, dropping about 0.5% overnight, but it never came close to our strike price. And anyone following along could have caught another nice payout, $531 overnight.
Solid.
Or let's not go too far in advance. How about the next day? Tuesday, July 7th, 24-hour payout. Again, the markets could have gone up, down, or flat. Doesn't really matter. With the 24-hour payout plan, it was set up in a way that will pay us as long as the stock stays above our strike price. Again, this time, the market, well, it fell overnight. Yet folks could have walked away with another $500 plus overnight. Or, hey, let's talk about the next day. Wednesday, July 8th, the market jumped higher overnight, like they usually do on a day-to-day basis, right? Nothing unusual. And folks could have locked in an easy $529 winner from that move. Then Thursday, July 9th, same story, 24-hour payout, $500 plus payout. Now, of course, as we've said a few times today, don't get carried away, folks. No strategy wins all the time. Do I ever take a loser? Of course I take a loser. Everybody does. But that's where I think a 24-hour payout plan really shines a lot. I mean, really, really shines. Once we enter a new trade, we automatically set in place an automatic profit target. Meaning, once we let the trade go, there's nothing left for us to do. This allows us to automatically book our winners much faster, sometimes even the same day, which is fantastic. Nice. Yeah. And better yet, it also allows us to hit our $500 payout, even in some of the worst case scenarios where the markets tumble hard and eventually finish below our strike. For example, like the next day, Friday, July 10th, even though we had tons of buffer room on our strikes, this time the market plunged north of 1% overnight. For most traders, man, that's a catastrophic nightmare. Yep. But not for the 24-hour payout plan. With the automatic profit target set in place, folks could have hit their payout all the way back there. enough to have booked $529 only 4 hours after placing the trade. And I can keep going on with examples. Take a look at what happened next week. Anyone could have taken a quick moment to place a trade Monday, July 13th, then met some friends for some lovely coffee.
You know how much I love coffee.
I know you love, this guy loves coffee. Knowing that their options were set to go to work for them, even in this ugly scenario. In this case, the target would have been hit the next day, and folks could have walked away with an extra $529 hands-free. Then on Thursday, folks could have set the trade that morning. Then maybe hit the gym. We were just talking about that before this webinar started.
Yep. Right after this, we're going. Gonna do some squats, right?
Now we're talking. Grab some sushi for dinner, right? With the trade set to take care of itself from there. And no surprise, checked in the next day to see another $500 plus overnight right at market open. How about the next day, folks? Wednesday, July 15th. Are you starting to see a pattern here, folks? That's what we're trying to show you. Send the trade back to the desk job for those of you who still work full time. And again, while most folks were watching their accounts bleed out the following day, anyone following along with the 24-hour payout plan would have seen a much different outcome. That's right, over $500 by 10:20 in the morning. And no, with our daily trade, we're not, I'm repeating, we're not leveraging some sort of crazy complex options to make this happen. This is one of the most basic options you can take. We're not doing credit spreads. We're not doing naked puts here. Get all these creative ideas out of your head nice and early.
Well, that's, okay? Again, that's why I came to you, because I was like, I want something simple, because I don't want to deal with credit spreads and naked puts, none of that.
I got you. I told you I got you. I got you. Those can be fine strategies to use for high win rates, but in my experience, you got a lot of risk for very little return, especially if you're not an expert trader. One trade going wrong can wipe someone's whole account, and you don't want to put yourself in that position. There's a name for that. I call it walking up the stairs and falling down.
Yep.
Instead, I like it when high probability trades and great returns cross path, where we could still see our $500 payout even on less than favorable market moves like we do here. For example, let's look at what folks could have seen the next day, Thursday the 16th. As always, anyone could have set their trade in the morning with plenty of buffer room to the downside. This time, the market dropped like a sinking ship overnight, north of 2% on that decline. That's quite a bit. Most folks' option strategies would have been wiped out, but not ours. In fact, folks could have actually hit the profit target all the way back there. Enough to bank $541 in only 35 minutes.
Nice.
Who wouldn't love that, right?
Exactly.
That's fantastic. And you wouldn't have to worry even for a second about what might come next. Then on Friday, July 17th, folks could have placed a trade in the morning, then hit the beach, then the golf course, or just knocked some things off the to-do list. Whatever you're into doesn't really matter. Once the trade was done, once the trade was set, your job was done. This time the market popped even so slightly after the weekend, but it was more than enough to hit our payout right at 9:35 in the morning with an automated target in place. That's fantastic.
Mm-hmm.
Love that. Really, really fantastic.
Now, Roger, I absolutely love what we've been able to accomplish here. Again, I couldn't have done it without you. I just didn't have the knowledge or the expertise that you have. I mean, we're in different worlds,
it's a different world,
and kind of combine those together. So I hope you guys are having the same light bulb moment, just like when I first talked to Roger about this and kind of we put it together. By simply aligning our daily trade with the anomaly behind these overnight moves, using options that are already well below the current price of the market to help amplify our daily potential, we've been able to flip even some of the smallest moves into payouts worth right around $500 each trading day, including many occasions when the stock market actually dropped overnight. And by sticking with the plan, you know, I'm always the guy with the plan, we see firsthand how these daily income opportunities can really stack up fast. I mean, for example, in January, anyone following the 24-hour payout plan could have gone 18 for 19 using this daily trade, walking away with an extra $5,621 for that month. Then in February, would have been far off from there. 15 for 19, way fewer trading days in February, but still a great month. And that would have been an extra $4,510 in the bank, net of winners and losers. Now, March, different month, but really kind of been the same story. 20 for 22 on the daily trade, or 20 for 22, sorry, on the daily trade, and $5,246 using the 24-hour payout plan. Then April and May, folks sort of hit it out of the park with the 24-hour payout plan. A perfect month in April. Remember, that was the really crazy volatile month.
Crazy month.
Yeah. Yep. Worth an extra $10,178 from the daily trade. And then in May, another perfect month, totaling an extra $10,794 in income, which isn't far from what some of our top students, which have been saying across both of our work recently. Jeanette said, I'm up $13,392 year to date. Thank you. More than making my goal of $500 per day. You have changed my life. Jason G. Before I joined, I was a losing trader. Okay. Now I'm averaging $8,000 to $10,000 a week for the past 3 months.
He's now at $40,000 to $50,000 a week for the past several months.
Boom! He's not solid. Well done, Jason. Mark says, another quick $4,875. Thank you so much. And Jeff S., you guys make trading fun. Starting with a small account of $2,500, and it's now over $16,000. Now, that's why today we're inviting everyone here today in this room to get started with these daily opportunities. Now, if you fall in the everyone category, that I'm guessing that's all of you, okay? Then I'm talking about all of you here today. Now, it doesn't matter who you are. I don't care where you live. I don't care if you're young, old, male, female, none of that. Today, you can start using this brand new method to target extra income right away, up to 5 times per week, every day the market's open, just by subscribing to the brand new daily income service. Now, we call it the 24-hour payout plan. Let me explain to you guys exactly what it is. This program is solely dedicated to targeting extra income every 24 hours, thanks to a new way to amplify this overnight market anomaly. Again, as far as I know, no one else knows this. And I'm happy to verify, after analyzing over 300 plus trades, the final study shows that it's very small account friendly. Listen, $85 average position size.
It's not big.
A $500 average target. 290 winners out of 315 trades, which equates to a 92.3% success rate. And the best part, well, one of them, there's so many best parts, is with this, there is built-in risk management. That's one of my favorite parts.
And profit target.
Yep, exactly. So in just a moment, we'll show you just how incredibly powerful that can be over the course of a year. But before we do, if you take one of the limited memberships available today, every single day the market's open, okay, we'll give you our very best 24-hour payout opportunity. One that we would personally recommend to closest friends and family. That's 250 opportunities each and every year. And each one based on the same method that targets an average of $500 5 times per week. And we'll be holding nothing back. In each 24-hour payout alert, we'll break it all down for you step by step by step. You get the ticker, when to place the trade, the options criteria, entry and exit target. It's all in there. And guys, it's simple.
No stone will be left unturned, as I say.
There's a reason I had this idea and I brought it to Roger, because I was like, it needs to be so simple. Even, this farm boy can do it. Okay. It's all in there.
And on a schedule too.
Yes. Yeah. That's the other part of that. Exactly know when. So each income alert will have clear instructions on exactly how to place the trade. And at the end of the day, we do all the heavy lifting to find each one of these income opportunities. So you'll just read the alert and follow along if you choose. Just like what happened recently, just back on August 11th. Members would have seen the trade alert right in their inbox, right around 10 a.m. that day. And even though the markets looked like a bag of garbage at that time, in that nasty August slump, anyone who actually took that trade could have come back to the next day and noticed an extra $535 sitting in the brokerage account. And listen, the other great thing about this, don't feel like you need to sit there and watch these charts all day long. Like literally, you don't even need to look at the chart. Okay. You don't need to stare at your computer all day long. We'll post the trade every day, right around 10 a.m. That way you have plenty of time to get in before the closing bell rings. And all you need is a standard brokerage account. You obviously need to have an internet connection. And the best part, just a few minutes to actually set that trade each day.
This is not designed for folks who want to sit around the monitor 24 hours a day doing this. This is for people who have a life.
Exactly. So we want your experience with the 24-hour payout plan to be as hands-free as possible, like Roger just said. That's why alongside the email alerts, you can also get them straight to your cell phone and Telegram. So that way, when you're out and about, you can still take advantage. You get the alert, fire up your broker app, take the trade if it works for you. For example, like the very next day, you could have gotten that email, taken the trade if you choose, and sure enough, anyone who would have gotten in on this could have pocketed an extra $561 in extra cash automatically. That's the key word. And yes, we'll be keeping track of all of the 24-hour plan performance for you, so you can easily see how good your results look compared to the S&P 500. All of them are tracked.
Tim, that's right. We're doing everything we can to make sure that new members have everything they need to succeed. Now, I know that not everyone has traded options before, and I know there's a lot of folks here who come from your crowd who
pretty much stocks on.
Right. And I have that in mind, and I wanted to make it really, really easy for those people to get started. And if you never traded options before, don't worry. Once you get the hang of it, it's really straightforward and it's repetitive every day. So it's very consistent. Again, with our trade, we're using one of the most basic form of options available. But regardless, to help you hit the ground running, we're going to give you Getting Started with Options guide. This training will include how to set up the trade we're talking about each day in the 24-hour payout plan, how to use the right order, get the best fill, and even set up automated exits. This is what I was talking about earlier for our daily profit target. And folks, it gets even better. There's something we hinted at earlier, and it takes this membership to a whole new level. These 24-hour payout alerts are specifically designed to only activate with very, very specific set of options data that lines up on one specific ticker. Now, with this unique ticker we're leveraging each day, there's a whole host of hidden benefits that come with it. Benefit number one. The first benefit is that with this ticker, there's zero assignment risk on the option. You never have to worry about waking up with 100 shares of your option closed in the money. It's not going to happen. It's a cash settle.
Right.
Benefit number two, keep your money away from that.
But he spends it so well. Oh, he does such a great job with the money.
Oh, don't get me started. There's a huge tax savings advantage with this ticker, which your brokerage should automatically handle for you, but there is a savings there. It's one that can save folks up to 25%, not 2%, 25% of the tax bill comes tax season, which, as you'll see in a moment, would have been able to put nearly $10,000 in the back of your pocket. Benefit number three, I'm getting too excited about it. It's such a great program. We really thought of a lot of things that people need right now. And last but not least, this ticker was recently unlocked to trade 24 hours a day. That means you actually have the potential to hit your profit target on the option even while you're sleeping and the market is technically closed. This is going to be a lot of fun.
Yep.
Now, folks, you heard me right. Earn while you sleep. I love that. In fact, this special perk set up by market operators just recently allows many popular brokerages to work around the clock, where we can hit our trades in the overnight session, midnight, 2 a.m., 10 p.m. It doesn't matter. we've even seen some of the weekend hits hit on Sunday night. Wouldn't it be fun?
S&P futures are open Sunday night.
Watching watching your favorite sports game, and then you get your phone, and all of a sudden you got $500 in your bank. Who wouldn't love that?
Yep.
Now, this benefit instantly helps increase our win rate. And on top of that, it also helps us automatically get in and out of our trades as fast as possible, avoiding any potential downside after the fact. For example, like the trade on October 29th, my birthday. Folks could have set the trade that morning, put on a movie with the family that night, then heard the phone buzz, bzz, 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 at 11 o'clock at night, notifying profit target was hit. With an extra $529 sitting in your account and zero worry about where the stock market or the stock is going to go next.
You can sleep well that night.
Exactly. Let's go to December 16th. Folks could have set the trade up that morning, like we always do. Maybe gotten some pancakes for breakfast.
You need more protein in there. There's way too many carbs there.
Too many carbs. Way too many carbs. Yeah, I agree with you. To find the account up $548 when things went as planned. With the trail nailing the profit at 7 o'clock in the morning. You probably haven't even had to take time to take your shower yet. And boom, already. That's in the pre-market before most folks are even at their desk. And before the market eventually tumbled after the opening bell. But again, with this special perk, that didn't matter at all. And it would have been no different with the opportunity on March 11th. $500 cha-ching at 5:32 in the morning in the account while most people were still sound asleep in their bed. Tell me, how many of you have ever won a trade while sound asleep in your bed? Right? I mean, that's me right there. Imagine what that feeling would be like, waking up in the next morning to find an extra $500 sitting in your account.
Beautiful.
Yeah, you don't get that type of experience anywhere else that I know of except right here in the 24-hour payout plan. Now, of course, for anyone who wants to explore all the benefits with our ticker, Tim and I put together a short brief that lays it all out for you.
Which I needed a lot of your help here.
Well,
we
got it done.
That's why I called you in as the expert.
But you know what? But now that you understand, it's very
well, so it's easy.
It's simple.
I just never thought it would be this easy. I'm like, seriously? I was a little embarrassed. I couldn't figure it out myself. But that's the beauty of having an expert. So,
and folks, you can access this brief as early as today. No waiting for anything. It'll come right to your inbox.
Now, that being said, I mean, Roger, what we've been able to accomplish here, I think, is unmatched. Now, of course, regardless of how good the results show, research, okay, not every trade's going to work out, okay? So you should never risk more than you can afford to lose on any single trade. It's called risk capital for a reason. Now, the great part is, luckily, you don't have to. You can take the 24-hour payouts with less than $100 on average. And if you're starting small, that's okay. I think it's great. I mean, start a new trading strategy. Start small. It's always be responsible, be smart. Now, what's great is you can always start small and scale over time. Again, the smart way to do it.
Right.
And here's where it gets even more impressive. After extensive research and testing, Roger and I developed a rule set to only isolate the most optimal options for entry. Now, not just entry, but also an optimized exit as well. Now, the details are simply too much information to cover today, and we wouldn't give it out for free anyway, not ever spending all this time on it, okay? But let me just tell you this. With that small tweak we made on the exit strategy, not only were we able to increase the profit factor by nearly 50%, all the way to 2.75 on the daily trade, but we were also able to cut the size of the losers in half, which ultimately drastically reduces the risk.
Right.
And when you stack that up over the course of a year, I think the results are undeniable. In fact, looking at all of the trade data, over 300 plus signals in total, including both winning days and losing ones too, anyone starting out with just $3,500 in each trade, for example, could have been averaging $75,000 plus in extra income per year.
Not bad.
Now, let me say that again. After trading through all types of market conditions, over the course of a year, it's going to be bearish markets, bullish ones, sideways ones, okay? Good economic data, bad economic data. The data has shown an extra $75,000 per year with zero compounding. So when you compare that average annual income to the S&P 500 during that exact same time period, I mean, it's not even close. I mean, it's barely perceptible. It's kind of like that chart we showed earlier.
Yeah, you can't
with the intraday profits versus the overnight profits. This one's a bar chart instead of a line chart,
right?
But it's really the same idea. So here's the thing. With that type of data and edge in the stock market, listen, I'm sure we could sell this as an elite service for $2,995 per year or higher. No problem at all. Not when you see those kind of stats. But we have something so much better in mind. Ultimately, our goal is to see our students pay off their membership as soon as possible. Get the payback, okay? That way, you're getting straight to the icing on the cake without having to worry about the cost of the program. So here's what we're going to do. First bonus is the 24-hour payout plan charter member discount. Get a load of this, guys. Today, we want to invite you to take one of the charter memberships in the 24-hour payout plan. Well, I know that, and now FYI, guys, $2,995 per year would be a great and phenomenal value. I also know that shelling out $3,000, it's a lot of money. I'm not saying it's not a lot of money. It is. So instead, for all of you today, the charter members, it's not going to be $2,995 for the year. We're going to knock $1,000 off the membership fee. And then if you join today, which I hope all of you do, because before that next trade goes out, we're going to take another $1,000 off, slashing the price to only $995 for the year. Now, while Roger and I both know that's an insanely good deal for all of you, I think it's a complete no-brainer when you look at the stats that we showed you. We're actually going to take things up a notch. Please pay attention to this part, guys, because the second bonus, I think, is the best bonus. I mean, pay attention. This is the 24-hour payout plan 2X scholarship. Now, as you know by now, with our trade, we're going to target around $500 each day the markets are open, up to 5 times per week, depending on how many days the market's open. And on our winning streaks, we've seen dozens of these so far that's shown the power to stack up to $2,500 by the end of 1 week, okay? Look at that chart, and then I'm going to move on. More than enough to cover your membership over 2 times over with some extra profits on top. Not bad in a week. Now, of course, we can't promise future returns or protect from losses, okay? That's never guaranteed. But here's what we're going to do. We're not going to start your subscription. So you sign up today. That timer does not start until the model portfolio that will be tracking the exact trades that you can take shows at least a $2,500 profit.
That's a sign of good faith right there.
Yeah, so FYI, guys, you're signing up for a year, okay? I want to be clear, and this is why I want to spend a couple extra seconds on this. You're signing up for a year of access to this, trade alert every day the market's open, but that year does not start until the model portfolio shows at least a $2,500 profit. Now, maybe it's a week, maybe it's 2 weeks, maybe it's 3 weeks, but whenever that hits, that's when you're counting. So you get a full year after the model portfolio has already performed. That means you'll get access to the newest trades from the 24-hour payment plan starting, today. First one will be tomorrow, Sunday. You'll get 0 delay, but your subscription clock won't start ticking against you until the fee is more than 2x paid off, according to Live Trade Tracker first. So our goal is to make it feel like you're getting the whole entire membership kind of as gravy on the top, okay? For free, with all those extra profits on top, already locked away in the bank. That's how confident we are in this daily trade. And I have to warn you guys, this is a limited time special, okay? You guys are the first ones today to ever see this. Okay, it's $995 for a full year, and you get the new trade starting tomorrow, 10 a.m. and every day the market is open after that. So if you're ready to take action and put these 24-hour payment plans or payment payouts to work for you, you're going to need to be one of the very first to click that link we're about to post in chat. And listen, guys, it's first come, first serve. Once they're gone, they're gone. So, guys, I'm going to jump over to my laptop here real quick.
Take advantage of this opportunity, folks. Again, this is ground zero. This is the first time that Tim and I are doing this. And this is $995 for a full year. And remember, again, your 1 year the clock doesn't start running till there's at least a certain amount of money. I think it was $2,500 in your account already made, which the portfolio made. So this is a real great opportunity. And as I said, Tim is about to.
Just real quick, I'll jump back with you, Roger. I don't know if I'm off camera or not, but so guys, I dropped that link in the chat or above the video. I'm going to put it in chat right now.
There we go.
Here to join.
Yeah, it's coming your way
today, momentarily,
folks. And as I was saying, this is a full package. It's not designed for somebody who's an option.
After seeing that deal, Roger, I got to pop another's in, brother.
It's a real solid deal. All right, I'll take one.
Yeah, I corrupted him. So that being said, guys, that link's above your video. It's also in chat. Click it now. We got a few more details to go over, but don't wait to get access.
Okay, folks, this is Raleigh back with you live. I just wanted to go ahead and stop the replay from last Sunday because I'm going to take over from here. I'm going to do a summary for you, and I'm going to also answer any questions that you've got, associated with this. As I mentioned earlier, this was a replay of the presentation, the first time it was actually introduced to the public last Sunday, and it had been very successful, and there was a number of people that missed out on this, and Tim was not available today, so we did not do it live, but we decided to do this replay, and I'm going to jump in and once again and help things out by doing a summary here. So let me go ahead and make sure my screen is shared. You should see everything there. And once again, we're so delighted that you are here, and we're just kind of, making this part replay and part real time. What I'm about to do for you here, folks, is to give you a summary of this. If you came late to the presentation, or if you'd like a quick little refresher, I'm going to go over a summary of the program. I've stripped out all the marketing stuff, all the testimonials, so I can cover the bare bones. And then I'll also talk about the pricing and then answer the questions that you have. It's going to take me about 7 minutes or so to go through my summary here. So if you've got questions, please put them in the panel. And as soon as I'm done here, folks, I will answer those. So today's focus was on the 24-hour payout plan, and it's solely dedicated to targeting extra income every 24 hours, thanks to a new way to amplify an overnight market anomaly. And we're happy to share that after analyzing over 300 trades, the final study showed that it is in fact small account friendly. The average cost per option contract is $85. We are targeting a 15% win every time we place a trade. So in the presentation, you saw us making $500. That was assuming a $3,500 stake. So 15% of $3,500 is $500. But you don't have to put $3,500 in to take advantage of this program. Let's say you only put $350 in. Well, then your win would be $50. 15% of $350 is $50. We also see that the success rate was 92.3%. Now, what do you get when you join the program? Every single day, we're going to give you the very best 24-hour payout opportunity. And each 24-hour payout alert will break it all down for you step by step. We'll include the ticker, when to place the trade, the options criteria, the entry and the exit target. We do all the heavy lifting for you. And a little bit later in this summary, I'm going to actually show you what those look like. And just like on August 11th, members received an alert in an email account. And even though the markets looked like garbage at the time, we can see here, not very attractive, anyone taking that trade came back the next day with a nice 15% gain. That was $535 on a $3,500 stake. And as I mentioned, had you gotten into this trade with just $350, well, you would have been up $53.50. And you don't have to feel like you need to be at your computer all day long, because we're going to post every alert around 10 a.m. Eastern time. That way you've got plenty of time to get in before, the market closes. And all you need is a standard brokerage account, any account that allows you to trade U.S. stocks and options. You need an internet connection and just a few minutes to set up each trade. It takes around 1 to 2 minutes to place the trades. And we want your experience with the 24-hour payment plan to be as easy and hands-free as possible. So if you're out and about running errands, or you're away from your computer or something along those lines, okay, we're going to go ahead, and send you an alert via Telegram or via text. You tell us how you want to do that. But that way, if you're, like I said, you're out and about, you're running errands, it happens to be 10 o'clock, 5 minutes after 10 or whatnot, the alert comes on your phone. You just look at the alert, see the information. You can use your phone to place the trade if you've got a broker that has a phone app, and that's all you're done. So we do make it easy as possible. And yes, we do keep track of the 24-hour payment plan performance. We have a trade tracker in your members area. That is where we're going to show you all the live trade alerts that we are issuing with the program, so you can see its performance. So we have absolute, complete transparency with what we do here. Now, all of the alerts we're talking about take advantage of options. We're not trading the underlying stock here. And if you're new to options, and many of you are, don't worry. We're going to put everything together for you with a options getting started guide, okay? This training includes how to set up the trade we're taking each day in the 24-hour payer plan, how to use the right order, get the best fills, and we're even going to show you how to automate the exits for a profit target. Now, Roger and Tim have already held a live step-by-step workshop, and they showed you exactly how you can start targeting these 24-hour payout plans with just a few clicks of the mouse. Folks, they did this on Tuesday, August 25th. So when was that? A couple days ago. They did a complete session. It was fantastic. And if you weren't there live, it is recorded and it is in your members area, okay? Now, what did they do? They included the full details from how to place your first trade to how the 24-hour payouts work. They also showed you how to automate the exits for maximum gains. They even taught a risk-cutting trick that they've picked up on that can cut your losses in half and also increase your profit factor by 50%. This is something that Roger is great at, and it's a twist that he's brought to this program. So for everything this program does, our publisher said, look, the retail price is going to be $29.95 per year. But because you're here, we'll launch this program on Sunday, and today, we're continuing the launch. We're starting by knocking $1,000 off the price. So $29.95 becomes $19.95. And if you join today, okay, before that next trade goes out, we're going to take another $1,000 off. So the introductory price, ribbon cutting introductory price is $9.95 per year. You can see this is where it is, and it gives you full 24 access to everything that's in the plan. And we also have a special surprise for you today. So if you'd like to even save more money, we've got a sweet deal for you where you can get 2 years for $300 more. And in fact, this is only good for today. So when you go to the landing page, here's what it looks like. 1 year for $9.95, 2 years for $12.95. So for just $300 more, you can have complete 2 years of the program. Now, when you join the program, folks, this is a snapshot of what the members area looks like. So when you go in there, you're going to see Telegram alerts. This is where you're going to sign up if you want the alerts to come right to your phone on the Telegram channel, which I recommend that you do. Here's your trade tracker that shows you the live trades we've placed. Here's a booklet that talks specifically about the tickers we're focused on in trading this program. For those of you that get VIP, I'll talk this in a minute. This is where you'll see the active dashboard. We have a getting started guide and master classes. Now I'm going to spend a moment on the getting started guide because folks, everybody that's new to this program, you must read this guide. It is excellent. It is just terrific. You can see here that it's broken down into 3 parts. Learning the strategy, the complete guide, the rules, the rhythm, every step from entry to exit. That's in section 1. Understanding the trade structure, the math, the payoff diagram, risk scenarios, everything is here. And then executing the trade, screen by screen, platform walkthroughs. Yes, we went ahead and we walked through and we took screenshots of exactly how you execute these trades. As a matter of fact, when you go to the first section, this is the first part that you see. And I'm showing you this because I want to demystify for a lot of people out there that debit spreads are not complicated. And here is the approach. When you get an alert, okay, what you're going to do is you're going to open up your platform. So at 10 a.m., you're going to get an alert. You open up your trading platform. Let's say it's Thinkorswim, okay? You select the ticker XSP. You select the exact expiration and strikes that you're going to see in the alert. You're going to buy the lower strike call and you're going to sell the call exactly 1 point higher. This is the debit spread. Then you're going to enter the entire spread as one limit order. These are not 2 different orders. It's one limit order. Also, you're never going to pay more than 90 cents on the order. And as soon as the trade fills, you'll place a closing order for approximately 15% more than what you paid with a maximum target of 99 cents. Then you leave the trade alone. And if you haven't been filled at your profit, okay, by 3 p.m. the next day, manually exit the trade. It's that straightforward, but we cover that in much more detail. The Getting Started guide is worth its weight in gold. And yes, folks, for those of you that have been asking the question, is there a lifetime plan? There certainly is, okay? And the cool thing about the lifetime plan is that once you pay for it, you never pay another penny for it for lifetime. There's no renewal fees, there's no maintenance charges, there's no ongoing costs. And even though we're going to be enhancing and expanding this program for you, we're never going to come back to you and charge you a software upgrade fee or a software maintenance fee. When you sign up for life, you're going to get all those enhancements absolutely for free. The other thing that's kind of cool about the lifetime is it's called a legacy subscription. And what that means is, let's say some point in time down the road, a year, 2 years from now, you decide that you want to gift your membership to your son, your daughter, or a friend or an acquaintance. You can do that. You just call us, tell us who you want to shift your membership to, and we'll do that for you free of charge. And then that person will have ongoing lifetime access to the program from that point. What a nice price. And by the way, on these legacy access programs, any of them, this is an asset. And many people will put these in their will because they want their executors to know upon their demise exactly who should be getting access to these legacy licenses that they have. It's that important. In addition to that, lifetime members are also going to get free access to an active trade dashboard. Now, this dashboard is designed to update in real time to pull the current prices and options for our daily trade. So let's say, for example, you get caught up and the alert comes out at 10 o'clock, but you're really not able to really act on this, let's say till 2 o'clock in the afternoon. No worries. You pull up the dashboard and you're going to be able to see the most up-to-date strikes and entry price and profit target based on where the markets are currently at. And folks, once again, I just took a screenshot. This is what that dashboard looks like. This actually happens to be for today. And so you can see here's updated information if you're going to trade XSP. all your information is right here for you. But I wanted to take a screenshot because people had said, well, what does that dashboard look like? Now, guys, I'm not totally familiar with it. I'm not a pro, but I at least wanted to show you in real time. It's going to provide you with updated information depending on the time of day that you can trade if you miss the 10 a.m. signal. And this is available to everybody that gets Lifetime. So I am recommending that you look hard at Lifetime. And here are some frequently asked questions, folks. How much money is needed? The average trade is around 85 bucks. So, it is small account friendly. You can open an account with like 1,500, 2,000 bucks, easily trade a single contract for $85. And as your account grows, then you can add more contracts. Should I be worried about more downside in the markets this year? Well, that's the beauty of the system. We're not holding positions, for weeks on end. Instead, we're targeting extra income overnight, usually hitting our payout in 24 hours or less. And we've seen some of our best moves when the markets are ugly. Once again, this is a hedged position. We're not buying a directional trade. We're not buying a call or buying a put where we need everything to move in a big way for us to make money. Can I trade this in an IRA or a 401k? Yes. This is retirement account friendly. If you're using a normal account, any brokerage does the trick as long as you're approved for the appropriate level. And in this particular case, folks, let me be crystal clear, you need to be able to do a vertical debit spread. And for most brokers out there, that's option level 2. I heard that I think it's Robinhood, it's option level 3 for whatever reason. And if any of you are having any difficulty getting permission to trade this, you look your broker right in the eye and you tell them that you need to have this, that you're part of a program, you're getting alerts from seasoned professionals, and you need level 3 or level 2. And if they won't give it to you, go to another account. You're the customer, it's your money. There's no reason they should be withholding permission. As a matter of fact, you could put any broker on with me right now, and I'll tell you that trading a debit spread is actually better for you and less risky than buying calls and buying puts. It's that straightforward. So from that perspective, away we go. Now, how do we close the trade? With the automatic exit, you don't have to do anything to exit the trade. We're going to teach you how to do it step by step, and then you just let it do the work. We'll even show you a few tricks with the exit that cut the losing trades by 50%. And a lot of people have asked the question, Raleigh, I see where we're getting 15%, is the target. What's a losing trade? Am I losing 100%? No. The average losing trade's about 56% on this. Remember, the win rate's 92%. What happens if I miss a trade? Well, you got 5 opportunities every week. So if you miss a trade, don't sweat it. You got a trade coming up the next day. But if you get Lifetime and you miss the 10 o'clock trade and it's, like I said, 1 or 2 o'clock in the afternoon, pull up the dashboard and you'll see what the best, strike prices are for you at that time. Do I have to be glued to the computer to take the entries and exits? No. Both the entries and exits are extremely easy to manage, and entries happen at 10 a.m. Each day, and exits are automated. Now, guys, what I'm showing you here is this is a screenshot that I took from yesterday's target. Now, since the program was launched on Sunday, we've had 3 days of trading, Monday, Tuesday, and Wednesday. All 3 of those have been successful. Here's from yesterday. So here is what you would have seen in Telegram, okay? Trade instructions below. Buy XSP, 27th August, 765 call, sell. So here's your spread, okay? Do this as one trade in your broker, and it's called a vertical or a call debit spread. Expect the net debit to open the trade at about 73 limit. Do not spend more than 0.89. See, everything is there. And for some people that have been asking about SPX, yes, we also give you SPX alerts, and this is for larger accounts. Let me explain that just for a minute to you. Some people have said, hey, Raleigh, $3,500, how many contracts is that? Well, if XSP, for example, is going to cost you like $85, a contract, you divide $85 into 3,500 and you'll find out that that's 36 contracts. Now, 36 contracts, well, that's not a lot of contracts, but more importantly, you pay a commission on each one of those, okay? So if you're a big trader and you're trading, and you want to go ahead and and trade, but you don't want to have all that commission, SPX is 10 times the size of XSP. So you buy 3 XPX contracts as opposed to 36. Okay, but what we do here, for those of you that are larger accounts or you like trading SPX, by the way, they both move. There's no advantage one to the other than the cost that you pay and the commissions if you're big time into trading. But anyway, you're going to get both of those. And I wanted you guys to see that clearly. This is what was issued yesterday. This was a winning trade, and I hope that's helpful to you. Question, why the 10 o'clock entry? Remember the data. Stocks tend to be flat during the day, and then they pop overnight. So with the way we're using the options that are deep in the money, once again, we start with the fact that the options are deep in the money. We get a win-win because we capture the decay during the day as stocks chop around, because most times during the day, stocks just chop around. And then we get the vertical upside from the standard overnight move. Boom. And that's the strategy in this. Do I have a risk of being assigned? No. The ticker we are trading is cash settled at 4 p.m. on the expiration date. So there's no reason to be ever worried about getting assigned shares. Can I ever hit our target the same day that we enter? Absolutely. You can enter at 10 o'clock. You've got a 15% profit target, and you might hit that, and it happens a lot, like at, let's say, 12:30, okay? And at that point in time, that's pretty sweet because on that day, you might have had a double payday. The payday from the trade you took yesterday, which you exited today, and the second payday is the one that you got out, during the course of a day. So bing, you got 2 hits on one day. So folks, this basically concludes my summary presentation. One thing I want to do right now is I want to put the pricing up there so that you guys see everything that's in effect today. The 1-year price, as you can see in the chat panel, is $9.95. Then the 2-year program is $12.95. Okay, and then the lifetime price there is $18.90, folks. $1,890. I mean, that's amazing for lifetime, and that includes, once again, the dashboard, that I just showed you. Now, everything has a 14-day money-back guarantee. Now, what is that? That means you've got 14 calendar days from the date of your purchase to take full advantage of this program, whether you've got the 1-year, the 2-year, or the lifetime program. And if for whatever reason during that 14-day period of time you want a refund, you call us, no questions asked, okay? All we suggest you do is this. If you've got questions with the program, talk to our support team. Give them the opportunity to answer your questions and show you how you can leverage this terrific program. But once again, we appreciate that this may not be for everyone. And if that's, if you come to that conclusion, you call us and we'll refund every penny of your investment. Okay, so let me look at some questions here. Jyoti says, Raleigh, is this program included with Roger's Diamond program? Okay, so we have programs here called Diamond or All Access, and Jyoti, it is not included there. However, if you are a Diamond member, you call 904-706-3539, and we've got a very, very special discount that we've put in place for you. This is not technically Roger's program. It's Tim's program. But Tim has agreed that for Roger's All Access people, there will even be a bigger discount on this if you are already All Access. Okay, so let me see here. Prahan said, will there be a masterclass on how to utilize the dashboard for VIP? Absolutely, absolutely. Okay, how is this different? And let me see, Jay says, how is this different from Premium Popper Pro? Jay, I'm sorry, buddy. I am not familiar with that program at all. I don't know who has it or what it is, but I can't help you with that. Okay, so another question from Gary. On your question there, Gary, with regard to that, go ahead and just contact our support team. Let me go ahead and put that for you here. Where is that? Lots of good questions here. Lots of really good questions here. Okay. And let's see here, going down the list here, is it possible to use SPX? Absolutely, Jay. And I think, if you're still here, Jay, I hope you saw that on that one slide where I showed you XSP and SPX. You're going to get both of those ticker recommendations with every alert that you get. Okay, Morgan says, hey, Raleigh, what's the program dollars? And thanks for the level 3 info. Can you scale up with this program? Oh, definitely you could scale up. We are trading tickers that are so liquid, XXP and SPX, folks, there's not a problem. Like once again, if you're putting in a $3,500, if you want to put 10,000 in or $35,000 in, you can certainly do that, and you're not going to have any problem getting filled with the program. So, like most people, depending on where you start, you've got an account. Some rules of thumb, folks. You've got an account. First things first, you should never risk 2%, more than 2% of your account on any given trade, and that's on the risk. Okay. So let's say the average risk on this program is 56%. So let me say that's the average loss. Let's make it easy and call it 50%. So you want to go ahead and let's say you've got a $2,000 account. Okay, that tells you if I take 2% of a $2,000, 1%, 2% would be like $200, right? Am I right? Or $400? I don't know, my brain is kind of frying. But anyway, take 2% of your account and you just want to, then you go ahead and size it accordingly. So you've got $85 on XSP, it's $85 per contract. Okay. And so if you're going to trade $200, that's 2 contracts. Okay. And so from that perspective, your expected loss, if you have one, is going to be 56%. Your profit target is 12. Where I'm going all this, and I'm fumbling, and I apologize because I must be getting tired. The point is you can start small, and as your account grows using that 2%, you can make determinations for yourself as to when you add additional contracts. Okay, and let's see here. So let me go back here for a minute because I think there's a question with regard to this. So Rodolfo basically says, can you show why there are 2 entries on the board? Do I ever use the entry on SXP? On SPX, I guess. The function is this, guys. It's a function of cost. All right. And if you're looking at SPX, I mean, this is $85. What would XPX be? Maybe somebody here that knows. Maybe somebody here knows what XP. I know it's more expensive than XXP. I don't know if it's 10 times more expensive, but let's assume it is. A contract here is $85, $850, ostensibly, and this is $85. They both are the same. There is no advantage over one. They both move tick for tick the same way. Okay. So from that standpoint, Rodolfo, to your point, we're just giving you an option. If you're a small trader and you're just looking to buy, 2 or 3 shares, you want to do like $200 or $300, well, then you're going to probably buy 2 or 3 shares of XSP. If you're looking to do 10 or more contracts, 10 contracts of XXP is going to cost you more money because you're going to pay a commission on every contract that you trade. So you've got 10 versus 1. So it's actually cheaper if you're going to do 10 or more to buy a single contract of SPX, if that makes sense. So I hope that answers the question. And guys, I have to tell you something here in full disclosure. I am not a seasoned options trader. You know, all of my experience is day trading the futures markets. But I am converting over to options, and I really like the idea of being able to trade zero dated and one dated options because it's so close to the way I like to trade. I mean, I like the idea of day trading. I like the idea of scalping. I like the idea of short overnight moves like we're seeing here. I've never been fond of long-term buy and hold because I'm much more comfortable with an expectation on my results in a short time frame. So you're asking good questions about options. I've got to stop at that point where I honestly don't know the answer to your question. And I appreciate the fact that several people here in the room are helping with that. So let's see here. Oh, I'm going to check something out. Let's see if we have it here in the room. I know that there's a training session that's getting ready to start now, and some people are asking me what the link for that is, and I honestly don't know. Let's see if I can find it here. I think Roger posted something on this earlier. I'm just scrolling up through the chat panel. We got hundreds of comments here in the chat, so, but I believe he did post something. And let me see if I can find that for you folks, because he and Tim are doing another live training session. And if you can't make it for any reason, they're all going to be recorded in your members area. I'm still scanning here, folks. Oh, wait, maybe this is it. Is this it? No, that's not it. I don't have that link, folks. I am sorry about that. Okay, so Zoom user says, what trading program does this work on? You know, once again, this is an alert service where you're going to be getting the actual trades. We're going to feed you the trades as you see here. And so you can use any broker that allows you to trade US stocks and options. You're going to be, you know, but you need to be able to do a vertical debit spread, which for most brokers is level 2. So you need to be able to do that, and you're doing one day options, one dated options. In other words, you're going to be buying something today. You know, you're going to be entering a trade today with the idea that you're getting out the next day. And sometimes you get out the same day. Your 15% target is hit, boom, and you're out. But you're going to be getting one dated option. And any broker out there that allows you to trade US stocks and options will allow you to trade these tickers with one dated option using a debit spread. So folks, anyway, once again, thank you so much for coming today. Appreciate your time and everything that you spent with us, because we know your time is valuable, and we hope that you certainly got benefit from this. We also know that you are, let me see here. That's not it. No, I'm looking for some links here. But we also know that you're here looking for an edge in the market. And I think this program meets that criteria precisely. Think about it. You've got two pros. You've got Tim and you've got Roger that have probably between them have got maybe approaching 60 years worth of experience in the market. And they pulled together a program here where they are using tools that they have created to find opportunities every day the market's there. And then they curate those for you. They hand select the best ones for you, and they send those to you with complete instructions as to what you need to be able to do to take advantage of them. You have a win rate of 92.5%. The target target profit is 15%. If we take a look at 300 plus trades, if I take the losers and the winners together, the average expectation on any given trade, the net is about 7%. Okay, and so from that perspective, I think that meets the criteria of an edge in the markets. So let me see if I can do this. No, that's not doing it either. Okay. Yep. Anyway, I'm still just looking for the link. But anyway, folks, thank you so much for coming today. I do know that we have about another, hour and a half in the trading session today. So if you're going to be taking trades this afternoon, I hope they are according to your plan. If not, enjoy the rest of your afternoon. Have a fantastic evening. And I look forward to seeing you tomorrow for the next edition of the VIP Trade Room. Also, just want to let you know real quickly here, folks, that this is a live presentation and it is being recorded. And if any of you would like to have a link to a copy of this presentation, there's the link, that right there. That's a link that you want to bookmark, because if you go there, about 2 hours from now, it takes about 2 hours to render and edit this and get it posted on the site, but it'll be there for you. And not only is today's session there, Roger's this morning, his morning briefing session there, yesterday's VIP trade room, yesterday's morning briefing session, going all the way back to February 28th of this year. A ton of information and education there for you. And with that, folks, once again, I'm going to be signing off. Thank you so much for your time. It was wonderful to get to know you a little bit better, and I do look forward to seeing you tomorrow for the next edition of the VIP Trade Room. Take care, folks. Bye-bye.